Good morning. Good morning. I want to call a meeting to order right now. Good morning. And as a way of introduction, my name is Deepening.
Of needs, and it goes bottom up. So as we are contemplating something new, as we are contemplating adopting an innovation, we come from a place of a need for physiological need and safety need. That is how we look at the world. That is how we engage the rest of the world, is through these fundamental needs. And to prove my point, and you've already done it a little bit today, I want you all to turn around and introduce yourself to the person behind you. Come on. I'm betting some percentage of you, when I asked you to do that, felt a little pitter-patter in your heart, a little bit of fear. Like, oh my God, I'm now going to expose myself to a stranger. And the stranger might not like me, or in our primal way, the stranger might actually hurt me. So what's funny about that little moment is your customer, or your citizens, in the case of you that run countries, they feel the same way. The Maslowian hierarchy of a need applies to every human being walking the earth. And so if you want to be successful with innovation, understand that hierarchy, understand the motivators, understand the behaviors, and meet the human where the human is. You know what this is. It was talked about a lot yesterday. Is the success of m-pesa technology, is there AI in that thing? Is there ML in that thing? Is there blockchain? Stop. Do they use blockchain to make that happen? The success of m-pesa is it meets humans where they are. It is a simple technology doing a profound thing. And I bet you if you took the Maslow... Hello. Be in a hierarchy, and you laid it against m-pesa's success, you would see that m-pesa nails every layer of that hierarchy, from physiological to safety to belonging to love to self-actualization. So if you want to be successful with innovation, understand the human and use that little cheat sheet called Maslow's hierarchy. It all points to this is not about technology, this is about humanity. FinHuman, not FinTech. By the way, I used to be the managing director of the Harvard Innovation Labs. I left 2 months ago. On my way out the door, I had a final meeting with the teams and my staff. And my last bit of maybe wisdom was this.
Just in case.
Okay. Thank you very much. That it's possible that the area of greatest learning opportunity... Can you take this? All right. The area of this is going to be hard for me because I gesticulate. The area of greatest learning opportunity in our lives, the area of greatest learning opportunity in our lives is the area that we think we already know, and that is the area of being human. Like nobody in this room has thought about being human in the last 24 hours. Nobody's thought about their customers as being human. Nobody's thought about the future of humanity. We're all fixated on the shiny objects and what I think of as the superficiality of things like technology. I'm pro-technology, but I really think it only works when you put it through the lens of the human. Hold on, I'm going to switch hands. The second point, remember I promised you 2%, 1% is all about humanity, understanding humanity. The second point is the idea of as we go forward, we fixate on going forward. And I think there's an irony, which is there's a lot to learn by going backwards. And I don't mean going backwards in terms of learning the ways of the West or the East. I mean learning backwards in terms of understanding what has happened since the beginning of civilization. The fact of the matter is, over the last 3,000 years, many empires have risen and many have fallen. Many. And so the question is, what can we learn about the rise, and what can we learn about the fall so that we can actually avoid the fall? The problem with this is we don't do this, right? We don't do this. George Hegel was a 19th century philosopher, said this: we learn from history that we do not learn from history. So there's a sort of corollary that goes with this, which is the definition of insanity is doing the same thing over and over again and expecting a different outcome. There's a lot to learn from history. Now the good news is, just like Maslow is a cheat sheet on our humanity, there's a guy named John Glubb, also around the 1950s, British guy, kind of a warrior philosopher dude, and he ended up studying empires, and that was his thing. And he ended up realizing that every empire since the beginning of time, Assyrian, Mongolian, Persian, doesn't matter, every empire has lasted about 250 years. Every one. It's quite remarkable. Everyone has risen and everyone has fallen. And he wrote this little treatise called The Fate of Empires. And in it, my view is a prescription on both how to rise and how not to fall. So it goes something like this. And this is crazy. If you I was a history major in undergrad. It's remarkably consistent. Every empire, every nation state that has risen has followed the same path. And the first path, or first stage, is the age of pioneer. And I think of this as the age of the entrepreneur, right? That we have a shared vision, we have courage, we have a sense of duty, we have responsibility, we're all in this together, there's self-sacrifice. We're doing everything we can to move the collective forward. And the age of pioneer is followed by the age of conquest, which in the old days meant physical conquest. I think in today's world it means virtual conquest. And if not conquest, this thing called co-opetition, or just call it collaboration. Followed by the age of commerce. So things start stabilizing, the economy is doing okay, a middle class emerges, life is actually pretty good. And then the age of affluence. So in the age of affluence, money becomes the centerpiece or the center point of the majority of society's actions, and a divide emerges, and inequality emerges. There's a loss of duty, there's a loss of self-sacrifice, there's a loss of us being in it together. It is literally the beginning of the end. And money becomes all. A quote from Glubb's piece: gradually and almost imperceptibly, the age of affluence silences the voice of duty. The object of the young and the ambitious is no longer fame, honor, or service, but cash. This guy wrote this in 1950. Mission becomes money, an open society becomes closed, and the entity starts fearing loss versus celebrating gain. A highly protected state. And then the end of the end ends with two other stages. The age of the intellect, where we start belly button gazing, we start thinking we've got it all figured out, we intellectualize everything, we think rationality can solve any problem, and we begin to really lose touch with our humanity. And then the final stage, which is really depressing, is the age of decadence. You know anybody following this path? The funny thing about this is I think it applies to empires, I think it also applies to companies. Caton and I were talking earlier about, I think it applies to individuals. I mean, you could argue you come out of college, you're a pioneer, and then your conquest is you seek a significant other, and then you stabilize your career, and you're now commerce, and then you do really well, and you're in affluence, and then you start thinking you got it all figured out, and that's the beginning of the end. So this is my view. We are here. No, you look at the data. We are here. We are here. We are not over there. We are here. Here's some data. I won't belabor it. Healthcare costs through the roof, cost of education through the...
Now, he spoke about the different... It is being written as we speak to be published in 2019 October. Hurry up. But yeah, this will probably make it into a book. Gradually, almost imperceptibly, the age of affluence silences the voice of duty. The object of the young and the ambitious is no longer fame, honor, or service, but cash. The one thing I'm glad to note is that at least the people who are in this Afro-Asia FinTech Festival trying to innovate, trying to create products and services are not outlined in this slide, but it's something I think, for me, it struck me, and I thought it was best to put it back up again. So since we have seen that all the setup has been done, there's a session that's coming up. Just a quick announcement, and Dibala, if you could please come up, because Dibala has a list of languages that he needs to talk about and then introduce the governor session, which is the fact that you're able to get simultaneous translation of all these sessions into different languages, and Dibala has that list of languages and the channels that you should follow.
Right, thank you, Wallace. So for the journalists who are here, the translation equipment are available at the back, and the channels are Spanish, French, Arabic, and Portuguese. So you can walk over to the back, and you'll be assisted there with the equipment so that at least we can all be together when we have all these presentations, and also when we engaged intensely on conversations around FinTech. Right, and also graciously, Colbert has agreed to allow us to upload, the presentation on the Woover app. So if you were happy with what you saw, you can actually head over now to that particular app and download the presentation that he has given this morning. As he's spoken quite movingly regarding humanity, right, and technology, there has to be a fusion. Give him a round of applause. And it is all predicated on the spirit of Ubuntu, which is, I am because you, I am because you are. I am because you are. So it's a coexistence. Just a tender reminder that we don't have any formal coffee breaks. So if you want to maybe slake your thirst or maybe grab a cup of coffee, we have the village. That's where we have the cafeteria that is just behind the exhibition hall that we do have here. So kindly feel free. Walk over there. You can grab a cup of coffee, or you can slake your thirst, take some water. That is all available as well. Connection, or connecting technology with the truth of humanity. I think that is my takeaway this morning as far as that presentation is concerned. But right now we want to even gravitate deeper and engage you on a fireside chat this morning. And it's my pleasure this morning to welcome the moderator that will take this session on. We're focusing largely on what is affecting this continent. And that is where we know, Colbert was saying, by the time he's done with his speech, 200 companies will have been created. The speed of technology. But how do we also adapt that technology and put it in a regulatory framework? They always say the nimble will jump, but the rigid will break. So I want to take this opportunity to welcome Maurice Mugisha, who will take us through this session, and of course introduce also his panelists this morning. A round of applause for him. Thank you.
Thank you, Dibal. Thank you very much. Good morning on this very cold Tuesday morning. It's pretty exciting. We are having a fireside chat, and I've been asking Wallace for quite a bit why it was called a fireside chat. But it's because the fireside chat in Africa is by the fire, right? And so I want to invite, and it's really an honor for me to invite our two panelists. It's a governor's conversation. So allow me to invite Dr. Patrick Njoroge, who is the governor of the Central Bank of Kenya. A round of applause, ladies and gentlemen. Allow me also invite now the Managing Director of the Monetary Authority of Singapore, Ravi Menon. We'll have the middle seats. Yeah, we'll have the middle seat so we don't have to go very far. Yeah. I just wanted to mention this before I take my set. So the conversation will not have a Q&A, here. But if you have a question or comment, go onto the app. We are really trying to be techie. And so if you're a bit traditional, we'll leave you out. So go onto the app and post a question or comment during our conversation, and then I'll pick it because I can see whoever is there and whatever they're saying, and also share the conversation on Twitter using the hashtag that's available. But once again, ladies and gentlemen, put it together for our co-organizers, Ravi and Dr. Patrick Joroge. All right, so I'm spoiled for choice. It's not every day you have two governors and a conversation with two governors, especially where there's no lunch or coffee. I wanted to begin with Ravi. The story of the inaugural Afro-Asia Festival. Where did this start from? Let's begin there.
Well, where did it start? I think we've been on this fintech journey in Singapore for about five years now, born out of a conviction that if properly harnessed and understood and used, technology can be a great force for good. And technology in financial services can be an especially powerful force for good, to improve people's lives, to reduce risk, to create new business opportunities. And as we embarked on this journey, we realized that innovation, by its very nature, is collaborative, does not know borders, and as the senior minister said, yes, learning from one another. And so we embarked on a series of partnerships. Obviously, the first few partnerships with the countries around us in Asia, whom we are more familiar with. And then also countries that traditionally Singapore has been familiar with in Europe and so on, and institutions. We've always been intrigued by Africa. To be very honest, we don't know enough about it, but we hear good things about Africa, about how Africa, to use Chris Colbert's phrase, is in the age of pioneers. And of course, we also know Africa is the cradle of FinTech, just as it was the cradle of civilization. So the m-pesa story is pretty well known. And we know of other leapfrogging technologies that Africa has embarked on. One thing that struck us about Africa a great deal is how innovation and technology is not pursued for its own sake, but to solve people's problems. And to solve the problems of the last and the least in society. To come up with solutions that meet their needs. Needs in places like Singapore tend to be a little bit more sophisticated, and with that, needs are also a bit more complicated, not always easy to meet. But this thing about meeting basic needs struck us a great deal. And the region in which we operate are also developing countries. Indonesia, Malaysia, Thailand, Philippines, Vietnam, Cambodia, also at roughly similar levels, maybe just slightly higher than countries in Africa. And the work we do needs to be relevant to them. And so I think the settings were ripe. And I guess then life has a way of creating fortuitous opportunities. Senior Minister Tharman came here, met Patrick. He came back and told me, Kenya is a good country we should partner with. They've got good ecosystem, very committed government and public officials, and an excellent central bank and governor. So when the next opportunity came up, we connected. We had a good conversation, and I invited Patrick to Singapore for the Singapore FinTech Festival. He did a fireside chat, which went very well, and we had further conversations. And I think instinctively and intuitively, we both understood that we could work together. So I suggested, maybe we can bring Africa and Asia, not just Singapore and Kenya, but Africa and Asia together to explore opportunities in FinTech on this theme about how to make lives better using technology and create this synergy. And The rest, as you say, is history. We had lots of interactions and interchanges. I think Sopnendu is a key player in this, coming here very often and collaborating with our friends here in the Central Bank of Kenya. And there you have it, the first Afro-Asia FinTech Festival, which has brought our continents together. I'm very pleased that there are quite a number of Singaporeans here who would otherwise not make the journey, but having made the journey, and I was talking to several of them, they are so glad to see kindred souls and spirits working on solutions, trying to solve similar problems, maybe in slightly different settings, and most of all, the opportunities for connections. So this has been really heartening, and this journey hasn't taken very long. It's amazing how so much has been done in such a short time, and we're all very hopeful and confident we can continue to build on this.
Thank you very much, Ravi. Dr. Patrick, the story of the Afro-Asia, you could have, as the Central Bank said, well, I don't think we are prepared enough to host the inaugural summit. Can you give us more time? But, you know, we're here. Your story of the conversation that began with the meeting with the senior minister, and now here we are at the first, you know, festival.
Thank you very much. Actually, I think for me it has been a story of surprises, meaning the opportunities came up in the context of conversations, as Ravi just now mentioned or explained. And what I remember distinctly is how quickly we connected. First and foremost with the senior minister. We actually had long conversations twice on this matter and others, but the connection was not just on the surface, it was actually very deep. Connecting in terms of the objectives of Singapore and indeed the institutions that he represented, and also ourselves. So it wasn't just on FinTech, but I think FinTech became a pretty clear area where we could expand our collaboration and so forth. It's interesting for me to reflect on the connection, or let's say how we saw things in terms of the need for collaboration. And obviously Singapore was many steps ahead of us in terms of maybe the FinTech or the technologies that were being used. By the way, that was a time, for instance, when they were already working on a project they call Obian, I think it is, on the DLT, on blockchains and things like that, which was several steps ahead of us. But I think the point is in terms of the substance, what is driving them, we connected very well. From our perspective, we obviously support and really appreciate collaboration. As you know, there's that saying that's along the lines that if you want to go far, go with somebody else. And so here was Singapore wanting to run with us. And we obviously felt that this, as Ravi said, kindred spirit was there, and therefore we could get there. I guess the point of how quickly we've come in such a short period of time, how far, how quickly, I think those are the things we kind of today will kind of sort of say, wow, how far, we are amazed by it. But I think it shows the commitment of the people that have been working on this project. And today, obviously, it's a success. But I think the point here is if we apply that same spirit, which is exactly what the sense of the memorandum of understanding that we signed yesterday and the commitments that were underscored or highlighted yesterday, both from the central bank, the level of the central banks, and also at a much higher level from the perspective of, say, the president and indeed the senior ministers. So I think the point here is that if we apply that same spirit going forward, we will get where we are going. We'll go far and at a pretty fast clip.
All right. So to both of you, here we are at the this FinTech festival. So amidst this revolution, digital revolution. So artificial intelligence, big data, the Internet of Things. What's the role then of the central banks in this conversation? If I could start there.
Well, briefly, I think there are several points one could make. First and foremost, I think, let's begin. We should not be afraid of the problem, of the question, or the questions that arise in this area. So we are not tech experts, but we have a responsibility as central bankers to, first and foremost, to maintain or to preserve financial stability. So that is our first responsibility. And as we look at that, we expect that all the issues that come from, that you just outlined, will in some way affect us or afflict us in particular ways. So we need to get to it. But we should have courage. We should have a sense of, yeah, we'll figure it out as well. We'll apply ourselves to it and we'll figure it out. So that's the fundamental point. Secondly, the responsibility of the central bank is also to, let's say, guide, or should we say, provide a sense of direction from its perspective of stability in the financial sector. And so even as we, and sort of set the red lines, as it were. And so in a sense, we do need to work with everyone else and while setting these red lines. One of the powers of the central bank that is least known, I think, is their convening power. I mean, you can see we are all in this room. In effect, the meeting or the festival has been convened by two central banks. And all the, even though we don't regulate the fintechs in the room, they are here. So in that sense, we do have that obligation of convening those that are responsible, because the danger is if left unattended, it will be a huge risk later on, let's say in 5 years, in 10 years, and all that from the perspective of the financial sector. It is important to also say that it's not just financial stability. There's also the issue of financial literacy. We talked about, and indeed also, let's say, inclusion. Those are concerns that are now very much in the minds of central bankers, and therefore we do need to think about those as we address these questions. The point I would also make is we need to collaborate. We cannot solve the problem by ourselves. And in that sense, this is why we are happy to work with Singapore and also other central banks around the world, including, say, those central banks from the advanced economies, which may be further ahead in terms of, let's say, asking, or should we say, checking what's going on in some of these areas.
Ravi, I wanted to ask this. There's a lot of critics, and I'm sure some might be in this room. There's critics about the disruptions that are happening, how technology moves quite quickly and changes, evolves a lot. And there's those worried about issues of cybersecurity, issues of data protection. What would you say to that?
Yes. And those are very real and valid concerns. So just if I could step back, let's start with the most fundamental thing that we need to look out for, and that is about trust and confidence. Trust is the foundational feature, the social glue that keeps societies together. It is also the foundation on which strong financial systems are built. Because if we lose trust in the system, what's the first thing we'll do? We go to the bank and withdraw all our money. Money stays in the banks because we have trust and confidence that the money is safe, it is not being squandered, that the banks are managing the risks, there is a regulator and a central bank overseeing them, and there are prudential rules in place. When you lose confidence in that, it falls apart. The same applies more broadly for all applications of technology, whether it's artificial intelligence, data analytics, and use of data. We allow it, we embrace it, we celebrate it and benefit from it because we have trust that our data is protected, that it is secure, and is used only for purposes that we regard as legitimate. So that trust and confidence are absolutely critical. And that's what regulators like the MAS and the CBK are focused on. That's our day job, as Patrick put it yesterday. Keeping the system stable so that people trust and can transact and go forward. But that should not stand in the way of experimenting with new things, right? The safer thing to do is to sit still, but actually that's not safe because events will overtake and disrupt, and then you get into risk. So you need to combine stability with dynamism. You need to combine safety with innovation. And that's not always easy. And so this is why there's a need for a continuous dialogue between the regulators and central banks and be it the fintech community or even the regulated financial institutions who are now increasingly moving into fintech and technological disruption, to have honest, open discussions about how new technologies are going to be applied, how the risks are going to be managed. And I think as long as both sides come to an understanding of one another's concerns, because naturally if you're an entrepreneur or a startup and you have a solution, you're excited about how you can make it as widely available as possible to as many people to harness its benefits. Now we share that, but we also want to make sure that the interests of the consumers are protected, that data is secure, data is private, that cyber and technology risks are well contained. So we can't have innovation without safety. And we can't be a smart nation without being a safe nation. And addressing issues relating to cybersecurity and addressing issues relating to the responsible use of data, the responsible use of artificial intelligence, so that it does not create unintended consequences, social dislocations, exclusion, and other ills that are very possible if we do not anticipate and address these issues up front. So I think there's a need for this continuous dialogue and open mind on both sides. And I've seen it work in practice. I've seen it happen very often. When cloud technologies first came on board, we were quite ambivalent. In fact, I would say apprehensive, because a cloud operates very differently from a standard server. And all our rules and regulations relating to technology risk management and outsourcing arrangements were developed with that model in mind, mainframe servers and so on. And with a cloud, data is commingled. You're not sure exactly where it is. And so the rules had to be adapted to the new reality. But the new reality also have to adapt to the concerns, the very valid concerns that regulators have. And so many of the cloud service providers we spoke to, once they understood our concerns, adapted their solutions to fit our objectives, prudential objectives, which are for a larger social purpose. And we on our part had to be also flexible in how we phrase our rules so that it focuses on the outcome rather than the method. And so we had to allow different methods and different ways of achieving the same outcomes, be it through a cloud or a non-cloud solution.
Thank you very much, Ravi. I'll come to you, Dr. Patrick. Let's discuss something that's very critical in this festival about social impact investing. And this is where many have been looking at how technology can come in and how these central banks can drive technology innovation around providing solutions for the SMEs, and how you can then connect the financial sector or the banks and the SMEs in providing capital, but also innovations in their space that provide for employment of our people, but also provide for an income and drive entrepreneurship on the African continent with an Asian perspective.
Okay. How much time do you have? 3 hours, maybe? You see, this is an interesting question and can be answered in all sorts of ways. I think first and foremost, just full disclosure, some of us, me in particular, and I'm sure others in this room, came to whatever profession we serve now, myself as an economist, because of concerns about impact, or should say, wider social concerns. But that, be that as it may, the point today is there are those of us that want to make an impact, positive impact that is, on society in particular ways. But I still think the numbers that people look at, and these are, say, NGOs and things like that, you think also about, say, your standard social corporate responsibilities and things like that. The numbers are small. I mean, let's be honest. They don't have the firepower, they don't have the scale, and they can hardly be scaled. But it's true they're making good social impact. From our perspective, we have to look at, say, the country. You talk about SMEs. Okay, in Kenya, for instance, SMEs are the backbone of the economy. The economy runs on SMEs. And if you look into other countries as well, Singapore, for instance, has done phenomenally well with SMEs. But that's a few years ago. Meaning, today now, the way one would look at SMEs will probably be different from the way, if you want to make an impact on them, the way it was done, say, 10 years ago, and so forth. But the point is that the scale is huge. So here comes the issue. How do you impact, how do you provide support, how do you provide direction for, let's say, 7 million SMEs in Kenya? That's the question. So you are no longer talking about social impact, in my view. You are talking really changing the entire economy, the organization of the economy. That's no longer just 10,000 people in a particular location or county and things like that. And I think those are the questions we are grappling with. The issue of scale is so important. And I think the point is we have a good tool, FinTech, a good set of tools. They may help, but on the other hand, they may hinder. So I think this is where we need to have that conversation and see how is it that we can use whatever tools we have today, FinTech being one of them, to change the structure of the economy so that the 7 million SMEs in Kenya, or for that matter, SMEs all over Africa and indeed also in Asia, can actually leapfrog, meaning move to a much higher level in terms of operation, in terms of incomes and impact on the people that are involved and so forth. So just to give an example, this is a question that we've been struggling with here in Kenya. And we did look around and in the various fora that we are involved in, we've talked to a lot of people that are there and their experiences. And in the end, we have seen that one of the issues that need to be dealt with is providing credit to the SMEs. It's not the only issue. There are much more fundamental issues, including the issue of dignity, and also talent, sort of improving, upscaling their talents and all that. So there needs to be a package that actually delivers all that in order to impact positively the SMEs. And so actually from our perspective, we've also used our convening power and brought together some banks, and they have put together a product which we think will lead to, once it's launched and once we layer on it other services like training, as I mentioned, it will really impact positively on the SMEs. So I think the general, in sum, what I would say is that it's using the same sort of approach, which is we have a problem, we have some solutions. By the way, the solution to that is very much an AI solution, because, so that's the FinTech part of it. And I'm sure there are others in this room that know that, can explain it better than.
Jared Oyer is saying to the CBK governor, are unregulated digital lenders a threat to Kenya's financial sector? If so, based on CBK's estimates, how long can they go unregulated before the negative impact is felt?
At this moment, the unregulated credit-only lenders deals, digital lenders on here in Kenya. There may be many in terms of numbers, but that's not the best measure. The best measure, first and foremost, is how big are they relative to other institutions. And in that sense, they are less than 1% in terms of lending through those platforms. Again, these are a rough estimate because they don't report. So it's not like we get regular reports. But our sense is that they are not that large relative to lending by commercial banks and things like that. But I think the point is, like everything, if you have an illness, you don't wait until this thing is choking you. You have to deal with issues, concerns early when they are emerging so that you can have an effective transition to something that is more sustainable and things like that. One of the points we've made recently is that they are unregulated, and therefore concerns such as they're unregulated because there is no law today that captures them. There are some laws that actually one can say in the sort of penumbras of those laws, they are captured, but we can have that conversation later. But I think the point is that they are not, they don't have a regulator that is assigned to them at this moment. And what has happened is the concerns, say, for instance, about customer concerns, and those are not taken care of. So you are, in a sense, at the mercy of the institutions. That is something that obviously we cannot accept as a society, because I, as a borrower, should expect the same customer experience in terms of respect, in terms of all those things, as when I borrow from a bank, as any other lender, in this case, the digital lenders. The other area which is of great concern, of course, is how they use the information in terms of data security, even cybersecurity and things like that. There are concerns there which obviously need to be dealt with. And of course, you don't know where they're getting their money from. So concerns, let's say, on AML, I'm talking of now anti-money laundering, and even combating of financing of terrorism. This could be a standard, very standard money laundering operation, and you'll never know. So I think all those concerns are there, and therefore this is why we've, and I think most people would agree, even they have agreed in particular ways, that we do need to regulate them. Now, the way you regulate them need not be the same as, or shouldn't be the same way you regulate a bank. So for instance, the prudential indicators or requirements will be completely different because their model is different. You're not protecting somebody's deposits because the finances will generally come from them in particular ways, but it needs to be clear where it's coming from and so forth. But I think there has to be a particular, let's say, direct level of regulation to cover those. So I think that's what I would say on that.
All right. And Ravi, there's a question, and feel free, Dr. Patrick, to pick this also up, because Philip Nyamwaya says, what operational frameworks exist within the central banks in both Singapore and Kenya to ensure that there is fair and equitable playing field for commercial bank-led and non-commercial bank-led fintech players?
Yes.
It's a bit selfish. We'd be talking about commercial-led.
Yeah. No, this is a valid question. It comes up all the time. What are we doing to ensure a level playing field? So I think there are several dimensions to this. One is similar activities ought to be regulated in a similar way, right? So if you're carrying out a similar activity as a regulated financial institution, then you should be regulated in a similar way, because the same prudential concerns and considerations apply. Now, we need to be also practical. And so we apply a materiality or a threshold. Now, if you are in the business of lending and lending large sums of money to a large number of people, then obviously the regulations that apply to lending must apply equally. But if you're just lending to a few hundred people in a closed community, small amounts of money, that's a different matter. If you're offering a payment service through the internet for small sums to pay for merchandise that's relatively restricted, that's something that you don't probably want to regulate, in the same way that you would regulate a PayPal or a much larger payment service provider. So we established materiality thresholds to see if you're keeping only a few $100s in your e-wallet, that's treated quite differently from something that's much larger. So I think we need to look at the underlying activity first, and second, establish materiality thresholds. And when those thresholds are crossed, then we need to ensure a level playing field. And the reason why we want to do that for both sets of considerations is because it is risk-based. What is the risk that a player poses to the system? When a player becomes large, then they pose a very similar risk and they should be treated the same way. If the player is extremely small and just starting out, then we can afford to have a bit more leeway for them. And they don't threaten the big players in the same way. But as they get larger, we need to actually bring them into the regulatory ambit so that the risks are well addressed. So this is more art than science. There are no hard, fast rules. Of course, some of the smaller players always think that we are a bit too strict with them. And the big banks think we are letting them off rather leniently, the smaller players. So usually in public policy, if there's unhappiness on both sides, it's a good sign you've pretty much got the balance right. But we learn as we go along and want to make sure that in applying regulation, it goes back to the earlier point, the primary purpose is to ensure trust and confidence. Consumers have trust and confidence, and at the same time allow innovation for new solutions that come up without being hindered by excessive regulation.
May I interject on this? Thank you, Ravi. But I think maybe now I go for the jugular, if you may, right? I think there's a misconception out there that it is us versus them, meaning banks versus fintechs, right? I have a fintech with three of us, me, my buddy, and one other person. And it's we against this big bad bank. I think that's a misconception. You can actually collaborate with that big bad bank from your perspective. Or the big bad bank can actually, well, maybe I shouldn't say bad, but that big bad bank from your perspective can work with you. And we've actually seen this happen in our own jurisdiction. There has been many instances where the bank is looking for a particular solution, and a fintech has actually proposed that solution to the bank. And that solution has actually been embedded in the sort of the framework of that bank's operation. So I think to sort of think of the banks, big banks versus fintech is somewhat of a misconception. But maybe the questioner is thinking, I presume he's Kenyan, and he's probably thinking that he saw the governor, yesterday I think we saw the governor dancing here, which was quite a, but I think there is an instant where the governor also danced while they were launching a particular product. This is a Stowy product. Now I'm saying that in jest, but the point is there are some specific, the central bank can also, let's say, give direction using its convening power about the impact of some of the products. And I think this is probably what he's also referring to, because in some of the products, for instance, yesterday when we were walking around there are some products that jump at you that will have significant impact because there is a gap that they are feeling. We talked about, for instance, the pension products. We've talked about, say, the minimal financial medical insurance packages that maybe some people are putting out there. All these are things with substantial impact in society. And so it is perfectly okay for the regulators to sort of say, hey, this area is particularly important for the community based on whatever the information is available to them.
All right, we really have run out of time. I know Dibal and Wallace must be cussing me. But I really wanted to ask, and this is a question you asked this morning. So the fintechs are in the room, the bankers and financials are here in the room, and the question was, where do we go from here? And that was asked this morning. I thought it would be good to give it to the bigger platform. Ravi, you want to help with that? Where do we go from here?
Where do we go from here is not the next event, right? That may be important, but that is not the most important. Where do we go from here is, I think, the connections that have been made amongst the people who attended. The 2,000 people who gathered here had conversations and made acquaintances, made friendships, and made connections. That's where we need to go further. Make those connections real, come together where there is an alignment of interest, objectives, and similarity in approach, and opportunity for synergy. Come together, make things happen in your own small ways. Because what the central banks can do is to provide a forum and a platform for such exchanges to take place. Our encouragement, and where necessary, also our endorsement for solutions. But really, innovation doesn't take place among central banks. It takes place in the community. And this community that is taking shape here, bringing people from all across Africa, and bringing some people also over from Asia and from Singapore. I think these connections are valuable. They don't happen naturally because of distances and unfamiliarity. But now that these connections have been made, I would strongly urge you to get together, to synergize, to make solutions that are relevant in your respective markets, learn from one another, adapt your solutions. Those of you who have good solutions and who want to expand into Asia, to sell things in Indonesia, which have in many parts of Indonesia have very similar profiles. The collaborations that you can make with a Singapore player or another player in Asia as a way to introduce into these markets. And for the Singaporeans over here, where do you take this from here? This huge continent still in a pioneering stage, lots of potential, a burst of entrepreneurial and innovation energy. See how you can tap onto those energies. Bring off what you can over to this side and see what you can do. So I think there's lots of scope for taking this forward. So it's not so much the next Afro-Asian FinTech Festival. That's not where we take it forward. And I also forgot to mention, financing and capital are very key ingredients of the ecosystem. So to all our African colleagues here, I would strongly urge you to come, and this is an open invitation to the Singapore FinTech Festival in November this year. Do come, check out the scene. One of the things that Singapore is fortunate and blessed with is that we have quite a vibrant financing ecosystem, venture capitalists, private equity players, and so on, looking for good ideas that make a social impact and yield a good economic return. And that may be an opportunity also to seek out those players. And we will provide, as I said, the platforms, the deal-making platforms, the matchmaking avenues, and so on, to bring money and ideas together. But we can't make the match, because that's the last thing you want a central banker to do, because we know nothing about this, right? But the people who have the money and the people who have the ideas, they know what can work together. So do come together, seize these opportunities. There's a lot that can come out of this.
Doctor?
Yeah, I can only associate myself with Ravi's comments, but just to say one or two things, in a sense to highlight. I think a lot of us will go back, the fintechs and others will go back to their businesses, first with a sense of encouragement. So this sense of, yeah, we can actually take the next step. We are not in the dark by ourselves. There are others like us who are struggling with the same questions and things like that. I hope that what they've learned from this conference, this festival, is also something that that will make them say, well, I think I do have an element of a solution, or I have a sharper problem. I've sharpened the problem, and I have an element of the solution that I can continue working with, collaborating with others around the world, some of the people that I met in this festival and so forth. But I think at the end of it all, it will be a sense of that there are others that will support us along the way. I think that is very much the key idea. And how you do that will vary, but it is in your hands in terms of the outcome, the solution. So the others that can support us, Ravi just now mentioned the issue of financing, which has always been, in a sense, like completely unsurmountable hurdle for some of the fintechs. I think they'll go back saying, that's not the problem anymore. I can get the financing if I do my proposal correctly and all that. And it isn't writing the proposal, it's actually preparing the product, sharpening the idea and all that. There are avenues, but I'll need to present myself through those avenues to get financing if I have a sharper product and so forth. At the end of it, it's about our collaboration. And I think for the central banks, we will cooperate and we'll collaborate as we signaled yesterday. But aside from that, it's also appreciating that it has to go back to the community. The word was Ubuntu, the opportunities that we present to others. And I think that that's the fundamental point in all this, in the conversation, at least for me. So I just look forward to fast resting. Maybe I'll take a two days off or something. And beyond that, I think we'll look forward to seeing what has been started, what has been planted, germinating into a huge...
Can afford that. So you're hearing about a different way. Now, Arnold, I'm interested in how Arnold is going to introduce himself here.
Well,
So
my name is Arnold Ekpe. I'm chairman of Baobab Group, which is a microfinance group that operates 8 microfinance, SME-focused microfinance banks in Africa and 2 in China.
that's interesting. I'm going to supplement this just a little bit because you have noticed so far we have no one that said they're a banker on the panel. And when Ruben talks, you're going to see he's also not a banker. But Arnold had a life before what he did. He was associated with a small bank called Echo Bank, which I think many of you know, for many years, and a very distinguished career there. So we're going to use him for both perspectives, even though he's being very modest in his introductions. So Ruben, please, last but not least. You may have to lean that way. I hope it can pick you up. Try the other one.
Good morning, everyone. My name is Ruben. I head up Grab Financial Services. This is my first time to Africa, and I just want to give thanks to the MES for the invitation here and the governor of Kenya and the Kenyan people for really extending their warm hospitality. It's been really exciting seeing all that's happening in the fintech area. I describe it as reverse innovation. We can learn so much from you and bringing it back to Southeast Asia and meeting the needs of SMEs. So Matt was describing us as non-traditional. Indeed, Grab is a non-traditional platform. We started out as ride-hailing 7 years ago. We set out to solve the problem of creating equality of access, to give a platform where micro-entrepreneurs can thrive and earn a good living in Southeast Asia. In 2018, we had the fortune of buying over Uber's business. Since then, we've expanded into a super app, and that was also when we launched our financial services business. For financial services, right now we've got 3 main arms, which is lending, insurance, and as well as payments. So our aim is really to give MSMEs the ability to earn and thrive a full suite of financial services in order for them to grow their businesses and to protect themselves and their families.
So starting not from banking and finance, but from ride-hailing, but now getting into finance, and not just for drivers, but for many, many different sorts. So we have a very eclectic and interesting panel, and we don't have a lot of time, but we're going to try to be very good at bringing out the things. I want to start with Barinata, because we had a point even earlier about we shouldn't just focus on getting credit out to SMEs. We have to make sure there's literacy, there's compliance, there's understanding, but SMEs are small. And some of those matters are complex, and lawyers have to do a lot of training, which is why they charge a lot of money. How do you get over this problem to provide, effective services to the smaller market?
Okay, so SMEs need a lot of attention. And like I said earlier, that's one thing the traditional law firms cannot afford. So what we basically do is to make use of a kind of marketing strategy called education-based marketing. I believe that if you're informed and you're properly educated about certain things, you'll be able to make informed decisions. So we understand their peculiarities, and we try to, let them understand all their pain points, explain everything. We do a lot of webinars, a lot of physical seminars, a lot of events. There is this signature event I have, Legal Roundtable, where we bring experts and we bring SMEs together, and they, try to explain to them the legal aspect of their business so that they are able to thrive and then do business as they should and not shoot themselves in the leg, basically.
Tell us a little bit more about how you're using technology and how you're also using association with other lawyers to get more economies of scale here.
Okay, so a lot of SMEs are online, even virtually all of them. So currently we have a community on Facebook called Law and Business Community, where we have over 2,000 entrepreneurs. And what we do, like I said earlier, we use the education-based marketing system to reach out to them. And then we also have, there's this messenger bot that I have. So once you interact with my content, we automatically capture your data, and then we're able to send you messages. Now, we're a focused law firm. We're very focused, and that's just on the legal aspect of their business, corporate and commercial. But what we sometimes do is to bring in experts. For example, I have a colleague who is a blockchain expert as a lawyer. So sometimes we do webinars, and of course, we have them virtually, and they come to, she comes to, take out classes and all of that. So if we have more young lawyers or more lawyers who are interested in working with SMEs, there was a line that was on the screen this morning, that young people are only focused about cash. They are not really bothered about honor and fame. So if we're more interested in humanity and working with SMEs, we'll be able to reach out to more people. So if this is a call to lawyers to start thinking specialization and start thinking, well, this is just an aspect of tech I'm using. What we're trying to do later on, like I was discussing with my co-panelists, is to have an app where we can have all of these SMEs come on. Okay, so currently what we do is, so we render a particular service. Maybe you want a contract, or you want a particular document, or you want to start up a business in Nigeria, for example. And then we do the registration and get your business floated, but then you need to open a corporate account, or you need to maybe do some other thing, you need a business plan. Sometimes we just let it go like that. So what we're trying to do is build an ecosystem, build an app where you can actually get everything all in one place. So that's how we're using tech to make life easier for SMEs as regards their legal issues.
So this is really interesting, because we talked a little bit about open banking earlier in the meeting, and you think about open banking, you think about that Wells Fargo slide with all the services that Wells Fargo does, and how you have zillions of fintechs that just do one of those services, and how you can't be competitive as a bank and all. Well, maybe the same thing is true for, we should have open lawyering and have platforms where lawyers that specialize in different areas. Maybe we can reinvent law as well as as in reinventing finance, and I'm deliberately starting before credit here, because you get a lot on credit, and I want to turn now from Africa to Asia with Samir, because as you introduced, you're here at a FinTech meeting, but you're not directly financing as part of what you're doing.
Absolutely. I think we're solving more underlying issues. So we talk about SMEs, and very often we talk about them in a single breath, but we do have to understand and realize that there couldn't be a more heterogeneous segment than SMEs. No two SMEs, even if they're in the same industry and similar ages, would have the same requirements and needs. Now, how do you solve a problem for small businesses who are as heterogeneous global around the world with a single solution? And what we've realized is that if you focused on two areas for SMEs, a lot of underlying problems, including of financing, can be resolved. And that is, number one, digitizing SMEs, and the second is connecting SMEs. in digitizing, I know organizations, and I've been part of one globally that has been spending and investing.
And more forward-looking earnings. And using that data, we're able to score them and determine their credit worthiness and to issue lines of credit to them. An area of distinction here is important, that we do not do this ourselves, we do this via partners. We are big on partnership. We don't believe that we can transform Southeast Asia ourselves. We believe in the proverb that was frequently cited earlier, that to go far, we got to go together. So what we've done is in every single country, we've partnered either with the leading banks or FIs through equity partnerships. And with that, we look for ways to combine data, where together our data gives us a more holistic view of our clients, and using our techniques, scoring techniques, be able to extend them credit. The other one that's really important to note is also collections. So a big part of what we do is really innovating in the area of collections. So our lending product, our insurance product, they all work on the rails of our payments infrastructure that allows us to do frequent deductions, whether it's daily, weekly, or monthly. And for these micro entrepreneurs, that means a lot. For example, in Malaysia, we recently, last week, launched a usage-based insurance. In the past, to drive on a platform, a driver would have to pay an annual commercial insurance. That's a huge outlay of money for many of these drivers. But what we've done was really fractionalize it, and now they can pay on a daily basis, as low as 2 ringgit a day, which is maybe around 40-60 cents per day, and that dramatically increases access for these drivers to come onto our platform.
That's a fantastic example, and it's showing how the payments rails themselves, they both enable you to
experience on when you focused on these foundational systems, how do you envision them, and more importantly, from a scale and making them industry-grade perspective, as you say often, how did you do that, and how did you overcome that challenge?
Sure. Thanks for having us. And I think just to add DJ's perspective on the foundational stack, one thing I would like to add on top of the stack is there's a payment layer, because we have to first identify digitally, move money digitally, and underlying is the whole KYC infrastructure, is a trusted data piece. There's one also piece which India is dealing with, is the whole consent architecture, because we have to find an electronic way in the world of digital, faceless, paperless transaction to empower citizens the right to share data in a way it's not filled with 1,000 pages of disclaimer, but a clear, easy to understand what data you're sharing to third party. And the other two ancillary stack elements which we started thinking about, how do we create another foundational infrastructure which allows non-financial sector data to be exchanged through a common gateway? Because as the sector is getting far more merged into this other non-financial sector, there is a demand for other sector to contribute the data. And the last piece to the puzzle is there a space for a foundational infrastructure for experimenting? So that's the expanded, extended version of foundational stack. In our own experience back in Singapore, last year, to DJ's point, banks were opening account to this old process of paper, come to the branch, show your face, and do all the processes. And when we put a process and a foundational infrastructure, in a sense, it was there, but all we did is we pulled data from existing original trusted sources. We did not create a new data source. All we did, there are existing agencies which were collecting data, and we didn't change anything in that process. They were the golden source. We aggregated data on a real-time basis through an API architecture, used that way to validate the customer to the trusted data source. So that gave us an unprecedented scale without trying to build something new. The second piece is that the whole process of consent being built into it. And third, using your own identity, which is a sync pass, which is a Singapore identity, a two-factor authentication to seamlessly pull the data into the system, with the banking system. But something I want to share here what we did, perhaps not by design, maybe by luck. In 2015, when we started thinking about fintech, while the whole world was talking about open banking top-down, forcing banks to open the pipes, we started a bottoms-up strategy. We worked with the bank on an API strategy, and I want to bring it very important in this context of foundational stack, because when you work with the bank, banks were quite comfortable with the idea of building APIs, building the pipes, allowing some data to be exchanged with third party. So by 2018, most of our banks had published their APIs in a way to start interacting with the startups. Now we have the foundational infrastructure in place. Banks by design could integrate faster. Now imagine a situation where you put the public infrastructure in place and there's an API-driven data consumption and your banks are not ready to consume. And that's what is happening in open banking, because you have a policy stance, but the banks are not ready to accept that process of consuming the data. So the second part of your answer to your question, the consuming part of the ecosystem must be ready to have the necessary tech infrastructure to give that scale and the seamless experience.
Thank you, thank you. I'm glad you acknowledged the luck, because that corresponds with the learning approach you have taken, as your senior minister also mentioned yesterday. And often we feel like this was very well planned, but the importance is how do you experiment and learn. But I also want to applaud you for sharing it with others proactively, so that we don't have to everywhere reinvent the wheel from the scratch every time.
Thank you.
DG Sheila, if I may go back to, before asking you to talk about risks and what risks do you see, maybe we can start with how will the lives of the people in Kenya change? There is already a lot of great progress, coming from 26% to 82%. What will this stack change for the lives of the poor especially? And then maybe we'll go back later in the discussion to the new risks and how we manage them.
I think that it's one of the questions that came up this morning when we were talking about financial inclusion, and people were asking, is it financial inclusion that's our end game? And obviously that's not the end game, but it's a necessary step to get to the vision that we have. And what you have when you have 83% financial inclusion at a very simple level is people able to transact. So you then have to ask yourself, what is that actually doing to their livelihood, and what is that doing to their productivity, and how is it benefiting them or hurting them, And I think that's the stage that Kenya is now at, and that's the stage that we're trying to analyze. I think for those of you who have been in Kenya over the last month, you would have seen that we've had a problem with betting, which has obviously been encouraged by the fintech technology that we have. And so the government has now started taking some action on the betting industry to try and curtail some of the worst parts of it. So as we go forward as well, we have to look again at what other aspects. For example, if you look at terrorism, when you look at the ability to use fintech products to move illicit funds without them being identifiable. Again, that's a problem that we face going forward. What are the benefits then that we can see? If you were to take, for example, which I think is a story we've told many times, but let me tell it again, we talk about the lady who has 2 children and is in the lower end, the lower spectrum of income. And she can wake up at 4 o'clock in the morning. By 5 o'clock, she's downloading her loan onto the phone. And by 6 o'clock, she's getting her kids up and sending them to school. In the meantime, she's also ordered her products to be taken to the marketplace. She goes and she trades all day on her phone. She comes home, she looks after her children, she puts them to bed, and then she pays back her phone and banks her profit into her account. These are the benefits, but we haven't actually studied them enough or quantified them enough. I can give you many other stories about mechanics. I can give you stories about people that I have interacted with personally, where they've told me that this is the only source of quick, accessible, dignified funds that they have. So we need to study that more. How do you make it more dignified? How do you assist them more? and also keep watching, as I say, the negative aspects that concern us.
Yep. Thank you for capturing both the negatives and the positives. Swapnendu, a similar question to you, but more focused on ecosystem development and managing the risks as you were doing that in Singapore and your experience even beyond Singapore in the Asia region where you have been very active.
I think the way I would frame this is that how the new architecture is getting constructed in the whole space of tech-enabled financial services. And I was in China 2 days back, and I met a bank called WeBank. And I had a fascinating insight from them as how they think about the new construct of financial services in this new ecosystem. They use this interesting way to look at how to construct the future digitally transformed ecosystem. And the first thing they talked about, I think we tend not to do that, is technology. It's almost fundamental to the whole architecture. And for the new economy to succeed and for the new tech companies to succeed, they must bring down the cost of technology below $1. And if you take India example, it is $1 per identity, it is $1 per citizen cost. And for any digital bank or any fintech or any licensed bank which is looking to digitize and transform their existing infrastructure, they must get to the point of a below $1 cost. And that needs remarkable re-architecting of the existing systems they have. In fact, WeBank, as an example, don't have any data center, but they run a far more secure, well-designed, highly scalable operations at below $1 cost. The second piece is the whole puzzle is the traffic. You must have traffic to actually make it a meaningful product and a feasible, sustainable business. And to get that traffic, you got to have a foundational infrastructure. We talk of the foundational stack. With the telcos must have the broadband in place. So how do you get a traffic coming to this ecosystem in a way that they're sustainable? And the third piece they talked about is the whole technology piece and the whole talent piece. And while Deji and me had a side conversation on how we look at talent, but interestingly, the Chinese giants have interesting stats. More than 50% of their employee base, or the tech-fin companies, have some experience in technology. So they're predominantly driven by tech-savvy, or not necessarily engineers, who drive the future construct of the employee base. And the fourth one was interesting because that was a surprise to me. They use what called transparency. Transparency to your consumer, transparency to your stakeholder or shareholder, and more interesting, transparency to your regulator, which is a very interesting shift we are seeing among the fintechs in our ecosystem. They believe transparency to your regulator is a big part of the new construct. And the last part of the T was the timing, is good luck. And from a policy standpoint, it's not about more of good luck. How to ensure the ecosystem is sustainable for the startups to survive in the period they're not ready for a commercial launch. And there's a need for a set of policies for a country to have where the startups can survive in a very frugal way, and they should be prepared for the right opportunity to plug in the product. So if you take all the 4 T's or the 5 T's in one package, I think that will define the future ecosystem, and this will be the ingredient for the most sustainable digital transformation of the financial sector.
Yeah. Thank you for all the T's. We discussed briefly, in my view, we're trying to make markets work. This is not about subsidizing activity. It's about trying to empower, enable the private sector to serve everybody inclusively. How do we think about engaging the private sector in the journey of developing this stack, developing these potential public goods, which finally have to be leveraged by the private sector to serve the people in the country? So starting with you, DG, would love your thoughts on how to enable or engage the private sector in this journey.
I think that central banks, by their very character, are not developers, designers, innovators. Our role is safety, security, stability, which is quite different. And so you would ask the question, how did m-pesa emerge in the Kenyan markets if the regulator is of that mindset. And I wouldn't say we changed our mindset. It's like what I said when I started about the deaf children. What we tried to do is we tried to listen and we tried to understand. And I hear people talking these days about sandboxes, but in fact, we've been doing sandboxing for 10, 12 years. And it started at that stage where you have an innovative company willingly, because there were no laws in place, willingly coming forward to the central bank and saying, this is what we would like to do, and this is how it works. And us willingly, because we're not their regulators, listening and trying to comprehend what it is. And there was a lot of testing going back and forward as to how it's working, whether it's working, what can be tweaked, what can be done better. I remember being very impressed because I wasn't part of that process. But I remember being very impressed from my background as a protector in understanding that the money movements were being reconciled every 3 minutes. Every 3 minutes. So even at that early stage, there was this openness. I think even now as we go forward as the central bank, we still have the same kind of sandboxing approach. I know there's some work we're doing with the capital markets. And again, we sit and we have regular meetings with them and regular discussions until we understand what it is they're saying and until they understand what we're saying. And then the testing can begin. So I think the openness as we go forward, and I think someone called us pioneers, maybe that's the sign of us being pioneers. And you know, they said also desperation leads to this pioneering spirit. So maybe we have no choice.
And this event is a testament of your openness to listen and engage with the private sector. So thank you. So Prendu, from your experience, any insights that you think can be transferred to the continent of Africa in terms of engaging the private sector? Because
yes,
you've come across this journey fairly rapidly, I would say, in the last 5 years, as Governor mentioned.
I think I will start with a repeated phrase Governor Patrick uses, class project. And what he meant is that a lot of fintechs start with this class project, quote unquote, and I think his worry is that will this class project be real projects or real industry grade product? I think over the last 4 years, and I've been talking to fintechs globally to many parts of the world, there was this gap which needed to be solved, is how to ensure this class projects get into a production grade journey, and what are the solutions we as a public policymaker can provide. And that led to this platform we built called API Exchange. And the reason I want to talk about it today, because this is something very critical for the industry to look at. What it essentially does is, if you are a small startup and you have a great idea and you put a open source, quickly built software, and you want to sell it to a bank, best of luck. The procurement process in bank will just throw you out of the door. So the way to do that, you need to put a platform which lays you to the journey of scalability. So what we did collectively with all the bright minds across many countries to put together a platform called API Exchange. What it does, it allows startups to put their products onto the platform. It's a completely cloud-based. We also brought the banks to this trusted platform where there can be they have a space in the platform where they can work with the startups and test their products. They can also write software code to build prototype with the startups' APIs, and they can test in the market without affecting their existing production system. The whole journey of innovation discovery, from testing the APIs, connecting to a prototype, connecting to a synthetic database of their bank, and building a very simple solution, opening up to the tech community, opening up to the consumers, their target consumers, before they make that decision to bring that startup to their own banks for their digital transformation, was a huge way or opportunity to just break that barrier. We also looked at one other fundamental problem, which is most of the banks have very strong legacy infrastructure. We also looked at opportunities where we can build a set of libraries or set of software solutions which can translate legacy to the new APIs connectors. So together, we put this platform. In fact, today afternoon at 1 o'clock, my dear friend Naveen is going to showcase to mostly the banks and fintechs here, how you can come to this platform and start building that journey of innovation and get into the system. Because my biggest bet, and I heard it in China, I heard it in India, and also hearing many parts, there are two big game changers going to happen in next few years. The rise of 5G network and the rise of B2B. What are B2B? These are the companies who are writing remarkable tech solutions, going behind the banking regulated banks and transforming the back office, middle office, and front office, and bringing down the whole cost structure to below $1. And to do that, you need a platform to build that journey to take them close to the production. I think that's the way we are looked at. And as a fintech, we can't have policy paper. We need real systems. So that's our contribution to this journey of building a system. And hopefully, right in Kenya and Nairobi, we'll launch this platform very soon, and we'll have our African continents to be part of this whole journey.
Excellent. You never fail to blow me away, Swapnendu. I'm hoping the MOU that was signed yesterday included all the 10, 15 elements that Swapnendu mentioned, and not just the 3 broad themes, and hoping all the goodness of the collaboration and the learnings you have done over the last 5 years, a decade of the fintech journey, can be transformed to this continent. I will flip the order for my last question because I want to give you the last word, DG Sheila. So we'll start with Swapnendu. What is your one key takeaway from the last, you have had so many discussions in the last day and a half, or maybe preparing for this, you have had much longer days and nights, but what is your biggest key takeaway? And while you think about that, and probably you've already thought about it, I just want to highlight 2 key words that resonated with me a lot in the last about 30 minutes. One is listening. Listening to the private sector, listening to your stakeholders. So thank you for both highlighting that and demonstrating that. And then transparency, the point that came from Swapnendu. So I would say being a good listener and focusing on transparency can really help us manage a lot of risks and engage a broader ecosystem in trying to build a more robust, inclusive stack. So with that last few words from me, I would like to turn it over to you, Swapnendu. What is your one big key takeaway?
I think as my always takeaway has been, what is the next? I think I'm going to work with the African ecosystem. I think one promise we should make, DG, is that at least get few countries into a foundational stack as soon as possible. I think we have enough history, enough evidence that foundational stack is the way to go for. We don't need to do another policy research why we need a foundational stack. Now is the time to take all the work done in different parts of the world, build this infrastructure in hopefully next 2 years. 2 years is a long time for me, but I'm willing to give that 2 years.
Thank you for being patient. Over to you, DG Sheila.
I also want to really follow through with what Sop has said. Data should not be commoditized. So what we should do now as policymakers and as government is find a way to help the fintechs, to help the commercial sector move forward through this very difficult KYC structure, and to find a way of preparing a stack, and whether it can add other values and other protections and other benefits, so be it. But we need to move quickly into that space. And what that will do is it will release a lot of these fintechs from some of the difficulties that they're currently experiencing in being able to move forward. So I like you, Sop, I believe that you don't come to festivals just to talk. There should be something that comes out of that, and there should be some impact. So I'm hopeful that in less than 2 years, we will have a Kenyan stack. And I know sitting in the audience today, we have other African governors, and I welcome them to join us and to be with us on this journey. Thank you.
Excellent. Thank you. A big round of applause for both of them.
I just to add, I have a very stressful panel today because I have a boss here and I have my wife and kid here. So very bad time to sit on the panel and do this.
You did very well. Go enjoy the safari you are about to go to. Thank you. Thank you.
Thank you very much. A round of applause for them again. Himanshu Nagpal, Deputy Director of Financial Services for the Poor, Bill and Melinda Gates, also Sheila Mijiwe, the Deputy Governor, Central Bank of Kenya, Sopnedu Mohanty, Chief FinTech Officer, MAS. Thank you very much. And of course, all that was digital infrastructure. It was all about digital infrastructure for the future, identity, data, and eKYC, which is very pivotal because I think it is Sam Walton, the chairman of Walmart, who said that the customer is a very unforgiving employer because he can choose to close an entire business simply by spending his cash elsewhere. So the way we treat our customer, and of course when we're getting into this space of the digital economy, how are we also laying the ground for the digital infrastructure where we are threatened as well with a transnational threat of terrorism, where people now can also use apps, you know, they are tech savvy themselves. So how also are we keeping in track in trying to make sure that also we can try and curb all this illicit money laundering that also is fueling terrorism, you know, in the world. And all that is how you know your customer. How well do you know your customer? So I can totally agree with what they've said. And of course, data consumption is a key element on what Sopnend was talking about this morning. And Sheila, she's mentioned about the terrorism that we need also to keep or raise the ante as far as fighting and combating terrorism is concerned as well. We're doing well. Let's go back to, of course, where we had left. That is the regulators hard talk. We had to just tweak a bit on the program to accommodate this big tech chat with the Monetary Authority of Singapore and Central Bank of Kenya, which we've done so far. And now we want to go back to that particular session that we had teased out earlier. That is the regulators hard talk. And prior to that, we had our panelists also talking about the fundamental rules have to change. Where we are headed as a world, the fundamental rules have to change. And this is where we're hoping now the regulators to come also to the podium. And called out Kennedy Komba, who is the Director of Strategy and Financial Inclusion Policy, Alliance for Financial Inclusion. Please welcome to the podium. And I'll also give you this handy opportunity also to welcome your panelists. Thank you. A round of applause for him.
Thank you very much, Ebo MC. And probably just a word of remark, I want to really commend the Central Bank of Kenya and MAS for trailblazing. This is a trailblazing. You're trendsetters in Africa for what you've done. It's outstanding, and we hope the rest of the African continent will take this as a leadership process to proceed in FinTech. The session, as introduced by the MC, it's going to be a regulatory hard talk, and we're going to ponder the talk more so on the issues and not so pinning the regulators, otherwise I'll be in trouble. And I want to welcome the panelists, and I'll start with Professor Benon Dulu, who's currently the Director of Pathways for Prosperity and former Governor of the Bank of Tanzania. As he comes, let's give him an applause. Thank you. And second, I'll invite Mr. Godfrey Kiptun, who's the Chief Executive Officer of the Commission of Insurance of Kenya. Mr. Kiptun, a round of applause for him as he comes. And next, I'll welcome Mr. Karamuka Buragisha John, he's the Director of Payment Systems from the National Bank of Rwanda. An applause for John. And last but not least, Mr. Paul Muthaura, a CEO of Central Bank, a CEO from Capital Market and Authority of Kenya, excuse me. Thank you, an applause for him. As you've noticed, we have a whole bouquet of financial services here. We have banking services, regulators, a former governor, and we also have the insurance sector, we have the pensions, we have the capital markets, and we also have a payment system, also a regulator from the National Bank of Rwanda. But more so, we also have the rich level of research that comes in this panel from Professor Ndulu, who has been working extensively in the central banking area and research in economics, and currently is undertaking the same role. And I'll start with him, given the fact that he's close to me here. We have had a lot of discussions in the past day and a half now about FinTech, the opportunities, but also the challenges and the risks that we actually seeing from the regulatory perspective. But also I want from Professor Ndulu to touch also on the consumer perspective, on the demand side issues relating to fintech, the opportunities that they bring, and he will also touch a little bit on key enablers going down to the fundamentals of what can we do to ensure that we really see that these fintechs will provide value not only to the socio-economic development, but also value to financial inclusion. Welcome, Professor.
Well, thank you. First, also to join others in congratulating CBK and the Singapore Monetary Authority, I think, for this very remarkable opportunity. Now, I would like to begin by just reminding ourselves that as we celebrate, the remarkable progress we have made, particularly in growing access and reach of financial services. And we have done so, I think in the last 10 years, the last decade, virtually on average now, access to financial services, form of financial services, in low-income countries has almost reached 80%. And not only that, virtually all regions have caught up to the leaders. But I think there are two major challenges that we need to reflect on as we even think about how we move with regulation going forward. The first one is we have almost 1 in 4 Africans and 1 in 4 low-income country citizens who are not yet, or who have not yet been reached. So virtually when you look at all the surveys that have been done, whether it's FinScope, FinAccess, or even Findex, you have that group of almost 20-25% that has not been reached. And universality, as you know, is one of the key goals that we have. So that's one challenge, to reach that group that still remains excluded. I think the second major challenge, which also should shape our regulatory stance, is a huge gap between access and utilization. Actually, data, again, depending on what you read, is between 1 in 5 and 1 in 4 who actually have access to financial services, whether bank or mobile, are actually active users of these services. So, and we know access is only a necessary condition for impact. You must be able to use in order to be able to really have the impact in terms of change in livelihood. So these two challenges still define a major sort of set of issues that regulators have to pay attention to. And I think there are 3 main categories that I would like to flag, and then I will focus mostly on one. One is affordability, both of the means to access, which means the platforms, and as well as affordability of data. Both those remain a huge constraint to low income and poor households. In fact, the estimate is that it takes at the minimum at least 2 to 3 months worth of income to get a simple smartphone. This is notwithstanding the fact that the cost of smartphones over the last 5 years has fallen by 50%, and the cost of making a call has fallen by 70%, is still inaccessible to as many as 1 in 4 that we are targeting to support. And affordability in particular of smartphones is extremely important. We heard yesterday that access to internet still remains at only 35% globally. In African countries, actually the average is much lower than that. And you know you can't have meaningful use of products really unless you are able to do more than P2P, which requires data and the means to use that data. So affordability is number one. Number two is capabilities of users. This is the demand side. We very often focus on the supply side constraints. We forget the fact that users have to be able to actually not only accede to those products, but be able to understand and be able to apply them in a meaningful way. We heard about financial literacy as a major constraint, which still remains a major challenge. But capabilities should not just be addressed through literacy side, but also production of products that require less, if you want, specialized skills in order to access those. So you can either raise your capabilities or lower the threshold of the requirement in product design for those type of skills. And that requires looking again at business models just to see how one can reach that. The third, and this is where I'll maybe spend a little bit more time on, is the ecosystem. First, I think, is just the attitudes towards innovation by regulators. It sounds simple, but a lot starts with the mindset. Unless one is willing to really take a risk in allowing innovation sometimes to lead regulation, you will not actually allow innovation and trial of solutions to proceed. This is not to say one should be a maverick, and we weren't mavericks in East Africa. You still need really to adopt sort of the learn, the test and learn, if you want, stance to this. But here is a catch, I think, as we move forward. We were much more in the space of access, and that's where the space of MNOs, to a large extent, they are large, they are clearly identifiable, and we can deal with those in much more definitive ways. But when we come to utilization, this is the space more of fintechs that typically develop products, and these products typically, and solutions are not yet tested, and they have to be tested in an environment which protects also potential users. And I think that's a much more challenging environment for the regulators. And it requires not only being able to have that kind of mindset of allowing innovation, but also creating, I think, instruments for incubation while making sure that you minimize any negative consequences to the consumers in that particular period. So capacity of regulators to understand products and to be able to quickly make a judgment is quite important. And finally, is partnership. We heard today, and I think the last two conversations with regulators was very, very relevant. The foundational stack is nothing more but making sure that you create space for interoperability amongst the wide range of players involved in delivering financial inclusion. It requires making linkages. It requires not only working on the government side, but also making sure incumbency does not hold back innovation. And incumbency, this is essentially just the fact that whoever is the first mover shouldn't restrict the possibility of further innovation coming into space. So let me stop there for now.
Thank you very much, Professor Ndulu. I'll go directly and probably pick up from there in terms of looking at the demand side issues, also from the insurance sector. And Mr. Kiptum, you work very effectively in the insurance sector in Kenya to ensure that insurance penetration in Kenya is upheld and probably increased. As you know, across the world, Africa lags behind in terms of insurance penetration. So what are you doing in Kenya in terms of enhancing and deepening insurance sector to reach out to the underprivileged or unbanked? And what fintech solutions are you applying in terms of either product design or opening up to the fintech, while at the same time regulating them effectively? Welcome, Mr. Kiptum.
Thank you very much. I think over the last few years, the authority has put in quite some effort to ensure that insurance products are available for common mwananchi. Also ensure that these products are useful and that it serves a useful purpose, or the utility for the customers is attained. And if you look at what has happened in the recent past, is that there have been a number of firms that are distributing insurance products digitally within the country. Of course, we know that the penetration level is not quite what we want. If you look at the East African region, for example, at Kenya, close to 3%. The rest of the countries are below 1%, which is something that the regulators in the region are working hard at to make sure that it improves. And you can only improve it by then providing access, affordability, awareness, and of course, creating the need by teaching or creating awareness on mwananchi that these things will save you. But as it is now, if you look at our country, for example, if somebody's house burns in Kakamega, for example, the community will come build that house. So does that person need insurance? So those are the things that we need to get them used to move away from that kind of relying on the others, because society is becoming more individualistic as we move along. And we need to build resilience in them and that they can be able to afford to protect themselves going forward. We also find that there have been a number of other items to introduce peer-to-peer insurance, pay-as-you-go insurance services, which are coming on board. The authority also has worked with other financial services providers to introduce area yield index that will rely on satellites to make sure that if there is a crop shortfall in whatever it is in the country, then satellite will be used to determine the kind of loss and how they will be compensated. There have also been other moves. Livestock also has come in on board, and the area yield index, as I talked about. You will also find that some insurance companies have now introduced chat boxes that would then pick up their customers and discuss once you make an inquiry and give you as much information as you'd want. There have also been other new products like m-pesa that you create a wallet. That wallet then is, you put in some savings, then it will come in at the times of need or when it is handy. So as it is now, insurance products are being distributed both digitally, but we haven't reached where we want to be. And this is something that we are going to work on with other fintech companies to ensure that we get there, even in terms of insurance processes of distribution, settlement of claims, and determining what quantum to be paid. Digital is being implemented. Then finally, on our side as the regulators, we have also put in a system that enables us to access data from the companies, analyze that data, and then provide feedback so that we can be able to guarantee or assure customers that they are being protected and that they will be able to get the protection that they have been promised by these insurance companies. Thank you very much.
Thank you very much. Probably I'll come back to later to you and see what other demand products do you have and whether there's research behind these new products that you've mentioned, a long list that you've provided, which is quite innovative. And I'll go back to a central bank regulator on the banking section side, Mr. Karamka from National Bank of Rwanda. And you've been playing a key role in providing infrastructure and supporting the market in Rwanda to ensure that fintech players do take a place. And how do you ensure that the fintech community in Rwanda actually is given the space to operate and to offer these services, but at the same time ensuring that your core mandate as a regulator is not compromised in any way in terms of efficiency of your payment systems, stability aspects, and monetary policy to some extent? Is there any risks that you see with this fintech? And if so, how do you effectively mitigate, and what success factors do you want to mention? Few of them. Welcome, Mr. Karamuka.
Thank you very much, Kennedy. I think I will start commending the professor. In fact, he tried to summarize the key areas of intervention in this particular sector. So when you look at the front we are working on when it comes to fintech in general and the payment industry in particular, you'll find that normally we have, I can say, classify 4 fronts. Build infrastructure, come up with products that are convenient and affordable to the population, but also increasing the access. Second is also to see how we can increase the propensity of adoption through different measures like financial literacy, build capacity, affordable services, etc. So that's also very important. That is about so build trust, because when you're talking about money, it's about trust. How do you build and maintain trust in terms of ensuring having a system that is well secured, proper cost mechanism, consumer protection, ensuring financial integrity. So that's some of the aspects we're also looking at. But the third, what is very important, whatever we're discussing about development in financial sector is based on innovation. So how do we create that enabling environment for innovation? So coming to how we work with fintech, first of all, I can see it in 4 angles. How, first of all, we put in place infrastructure, basic infrastructure that can support any additional service. That's something we've done. Yes, please.
Let me just touch with you because you're my friend, and
yes.
I can bully you a little bit. So what type of basic infrastructure do you mean?
That's what I'm saying. It's about us, ICT and the financial infrastructure. Let me give you an example. If you don't have a proper, robust ICT infrastructure, whatever financial services will bring, it won't be possible. So we've seen, for example, having a good coverage in terms of 3G and 4G in a hilly country like Rwanda. So that's very important. So, and how do we ensure that also the data, I think this was also touched by the professor, are affordable to everybody. So that's very important. We also have basic infrastructure in terms of financial services. Having, for example, the entire interbank system that supports the retail system, the retail payment system is also very important. For example, we are working with the current industry to build an interoperability framework where microfinance, banks, MNOs will be able to integrate to each other and be able to transfer funds from any account. And on top of that, we shall also integrate other overlay services that are provided by fintech company. So that's what I was talking about, infrastructure, that is very important. Second, about the regulatory framework. On the regulatory framework also very important. If you look at what we've done, we've done a good job, and if I quote the last report that was issued by GSMA, I think it was presented in Abuja, you remember, they have shown a positive relationship between a high regulatory, m-pesa regulatory index and the adoption on m-pesa. So when we look at, for example, where Rwanda is sitting today, it has been among top performers. So what we've been done here is, when we look at what we have been doing, maybe Rwanda can be one of the countries that are reviewing frequently the regulatory framework. Because for us, we take it as a learning process. How do we adapt to market dynamic? I think the professor talked about the mindset. How do we ensure that we put the regulatory instruments that supports the market development instead of having just rules that are there? So I can give an example. Even after consultation and establishing a particular instrument, we even go back after that and assess how it is being implemented, how it supports the market. Even, for example, when it comes, for example, to a particular application we receive, that's for us an opportunity to review and see if really the regulatory framework we have is appropriated to the market. And this has helped very much. That is about the role of the government. We've seen the government also playing a good role in terms of as a payment service user, leading by example, giving the direction, the guidance on where we want to be. And this has been very, very, very supportive. That is about collaboration. I'm proud to see, for example, when we sit with different players in the market discussing issues in the industry. I remember, for example, 2 months back, we've been discussing issues related to connectivity of point of sale, where you find banks, MNOs, regulators. I'm talking about, when I'm talking regulators, financial regulator, technology regulator, sitting together, analyzing the entire value chain and arrive to how we can support this. And this has been very well. Or when we sit, for example, in a fraud forum, discussing with FinTech, banks and other players on issues related to fraud and come up with solutions. And they implemented the recommendation without any supervisory enforcement. For me, that has been something we've achieved. So just to summarize is to have that openness, but keeping in mind also to help fintechs, because what we've seen in the fintech industry today, they are doing a good job, but at a certain point of time, we need to help them in terms of guiding them on how they can improve in terms of governance, proper managing some risk, because some of them may not even understand the risks that are related to the industry.
Thank you very much, John. I will get back to you in terms of discussing how deeply do you really facilitate this fintech to improve in terms of incubating them or probably having a sandbox in that context. I'll go directly to the Capital Markets Authority CEO, Mr. Muthaura. And I know you're running a very important platform, and probably people are also thinking about cryptocurrency assets, the new trends that are opening out there. But before we go there, I would probably want you to talk a little bit of the fact that you're also becoming more tech in terms of facilitating the fintech community, running up a sandbox. Can you really explain to why would a Capital Market Authority really run a sandbox? We would expect that we'll just have people listing up companies, but now you're also running a sandbox. What's really behind that?
Thank you very much for that, Kennedy. I think when we look at our role, and I think this is very critical for regulators cutting across all emerging markets, that we carry both responsibilities for market regulation as well as market development. So in how we approach that market development mandate, it creates certain very real tensions within an organization around how do you make sure you're addressing the, in my perspective, investor protection issues, market stability issues, while still allowing for innovations and new to come to the market. Now, in establishing a sandbox, it's really based on, one, a fundamental recognition that the way the rules have been written for incumbent businesses. And to expect the very same licensing, regulatory, reporting structures to then apply to a business that is designed to be disruptive, designed to be fundamentally different from what already exists, means that we also need to look, take a step back and not bind our own hands with the regulations that are in place. Secondly, it's about creating a level of regulatory certainty for the innovators that are out there. It's one thing as a regulator to confirm your willingness to discuss, but a lot of the tension then comes from how long exactly will we discuss for? And as you look at the back and forth deliberations around policy issues, you can find the very market realities that innovation was responding to have fundamentally changed by the time the product has been approved. So creating a sandbox also allows us as a regulator to, from the very beginning, start a conversation around understanding what is the target outcome, what are the underlying risks that are going to be introduced by the introduction of this innovation, and therefore how do we start looking at building a mitigation strategy for that. I think it's a global reality that the process of legal amendments, statutory amendments, is very, very slow. So a sandbox environment then allows you, on the basis of a common understanding of intention, to allow the rolling out of a test of that particular solution, so that even in that process, as the regulator, you're better able to understand the reality of the risks. At the beginning of the conversation, it can be a very theoretical point on maybe this could happen, maybe that could happen. But when you're able to put it in a test environment, I identify, a defined scope of potential investors to be engaged, level of value to be involved, and also structures to deal with compensation should it go terribly wrong. Then you can really get into the heart of the product as a living being, and then start being able to be much more strategic in how you build the regulatory responses to that, and an appropriate environment for it to scale up in the longer term. So that really speaks to really the fundamental outlook we've had in setting up a regulatory sandbox. And it's been very, from our perspective, very well mirrored in our fellow peers across the globe. We're a member of the Global Financial Innovation Network, which brings together 35 financial sector regulators, as well as associated businesses, companies, looking at how do we create this conducive environment, and how do we make sure that national sandboxes, national initiatives can then translate into supporting cross-border engagement, cross-border facilitation of scalable solutions. But ultimately, I think one of the key challenges we continue to see as a sandbox is in jurisdictions where we have separate sectoral regulators in the financial system. A sandbox in the capital markets can only address a solution targeted purely at the capital markets. But these solutions often have potential to address pensions, insurance, payment issues. And unless we're able to move towards the potential for a pan-sectoral sandbox, I think we'll continue to see the full potential of these innovations not being able to see the light of day.
Now, thank you very much. I was just looking at the app to see if I'm getting any questions, but the questions that are directed to the app are more directed to the previous session, and they're all directed to CBK. Apparently, we may not take those questions because CBK is not on the platform at the moment. I'll go back and probably engage with the panel with one last round. I have 10 minutes, which is good, and these 10 minutes, I'll probably just take the liberty to discuss about risks. We all mentioned risk, and we can just touch on risk depending on the perspective that you want to address it. You may address it in terms of the infrastructure, on the supply side, demand side, or just the risk of the fact that it may also be an issue that is it really something that is going to touch on the financial stability? Is it a monetary policy risk? And when you look at that, also take into consideration that we didn't discuss in this 1.5 days in terms of platform economies, which like Grab mentioned a little bit of it, but this is where we're probably moving into, where you'd have one super platform providing several different services, like Mr. Kamuto just mentioned, in terms of the capital market products, where you'd have a platform having several other services being plotted together and offered by one fintech provider. So how do you manage such kind of risk? Any other risk that you see within this fintech? And I'll want you to respond quickly into that, and I'll start again with the same order that I had before, and I'll start with Professor Ndolo. Thank you.
I think one of the key risks, which also touches on affordability, has been, I think, the rather unstable fiscal regime in relation to fintech-related products, and particularly on financial services. Without mentioning countries, I know there is at least one country where out of every 100 shillings worth of revenue generated by a fintech company or financial, a mobile money company, 40 shillings actually goes back to government coffers. It has started to raise really not only the costs of the service to the end user, but eating also into the profitable margins for a number of these entities. And sometimes I think the tax base itself is not defined properly, particularly if it is transactional rather than simply the fees which are actually coming from that. You get to hear about this a lot more now in the discussions, and I think this is one of the risks that is definitely within the hands of the authorities to manage.
Take note of that. Unstable fiscal regimes. From the insurance sector, what risk really makes you not sleep at night?
Thank you. Insurance in itself is a risk mitigation strategy. So as we move into the era of fintechs and promoting fintechs and ensuring that they contribute to that distribution and mitigation of risk within society, the authority, of course, will be very careful, provide enabling environment to these fintechs, but ensure that they don't create more risks to members of society. So we'll be very careful, look at it, and of course you may be aware that we changed our supervisory framework in the recent past to ensure that we are more flexible as opposed to the previous rule-based regime. But then it doesn't mean that the risk is not taken care of in terms of distribution of those products and the underlying base of it. So fintechs will be encouraged, but without increasing the risks to society and that assurance to society. Thank you.
Thank you so much, Mr. Kiptum. Mr. Karamka?
I think what I'm seeing in this industry, apart from the traditional financial risk we are used to, I'm seeing the emerging operational risk, characterized by a hyper integration of different services. So a fintech, to provide the services, they need to access payment accounts, for example, and they need to link to banks and other MNOs, for example. So this is bringing really a big risk in this industry that we needed to address in terms of cyber security. The second risk I'm seeing is on the legal. We are all adopting this sandbox regulatory framework, which maybe we don't master the same way, and there is the risk of maybe having a kind of legal arbitrage where you may find some products are regulated, are licensed and regulated, others are not. So this is something we need to look at carefully and see how we can address. The third is what my colleague just mentioned, where we are having now with innovative products, we are seeing hybrid products that may touch or may be under regulatory purview of different regulators, capital market, central bank. So how do we work together to ensure we don't have a kind of gaps or in terms of how regulate licensing or not even denying such kind of innovation because regulators are not working together. So that's what I'm seeing in this domain in terms of risk.
Thank you so much, John. Yeah. Mr. Madura, Paul?
I think I'd see it at multiple levels. One, given the nature of this panel, I think there's the very real risk that if as regulators we're not able to innovate fast enough ourselves, there are going to be huge opportunities for leapfrogging for the continent that will never be realized. If we try to keep squeezing in innovation into legacy frameworks, they will never survive. And we will imagine that the opportunity for Africa's transformation through financial technology is just not being realized, but we're actually the ones who are creating that barrier to progress. Secondly is, because of the complexity of some of these innovations, there is a very real risk that as we continue debating as regulators, because these innovations are actually responding to very real world market issues, they're actually growing. Even as they're waiting for us to regulate them, to give them clarity, they're growing. And by the time we do build an appropriate framework, we'll find that they're not actually able to be reverse engineered into what we think is a transparent, well-structured environment. So decision-making, delay in decision-making is going to be a very significant risk as we see this sector evolving. Certainly issues around cyber resilience and security are only going to grow, and that will go very much to how we are resourcing ourselves. Regulators used to be economists, finance people, accountants, and lawyers. Now they need to be, half the office needs to be ICT professionals, need to be data scientists. So we need to fundamentally shift the way we're resourcing ourselves. And finally, I think at a much bigger picture level, as Africa, we need to pay very careful attention to how we're going to control our data. Data right now is and will only grow to be the most valuable commodity in the world. And if we're not building appropriate structures for us to, one, be in control of that data and how it's going to be used, how it's going to be monetized. Secondly, how it's going to be protected and how we respond to global trends on data privacy. To also manage, not taking data privacy laws that are built on, assumptions that you already have details on people's addresses, people's financial statements, so you don't need all this other information to build financial models. We don't have that reality. So how we respond to data privacy will be very key, but how we ensure we retain ultimate monetization capacity of our data, I think is a very significant issue.
Thank you very much, Paul, for that. And before I bring back the mic to the MC, I'll probably just say one word that I've just learned from the regulators here. We're concluded with risks, but it doesn't mean that we're concluding very pessimistically. We're concluding with optimism in the fact that they opened up the session with opportunities that they see that the fintech have and hold for not only for financial inclusion, but for the overall public policy objectives of the regulatory side, from the regulator's perspective. One key word that comes out of this is they are seeing that the future regulator, which is now, needs to be agile, flexible, and adaptive in terms of how they will respond to the dynamic world of fintech. They're talking about moving away from rules, more on the principles, and not really going back to amendments on a daily basis, which you cannot really go into that context. So these are very progressive regulatory discourse that we discuss, and it holds a very bright future for Africa to have a great, thriving ground for fintech. A round of applause for them as they leave the podium. Thank you very much. Welcome, MC.
Thank you. A round of applause again for Kennedy Komba, Director, Strategy and Financial Inclusion, Policy Alliance for Financial Inclusion. Thank you very much. Right. So I want just to urge us to stand a bit. I know you've been seated for quite a while, so you can actually stand and stretch a bit. Please, please, please. Before we go to the next session, just take a few minutes. Are we tracking together? Are we tracking together? And I want to thank you for being amazingly patient with us. So we'll have this last session, Academics Hard Talk. But before we head there, remember my finger? Right? For them that are joining us or you just joined us, we had this index finger being lifted up. And of course, we did a small exercise a bit in the morning just to keep us warm. You could realize today it is numbingly cold. So at least have some exercise to keep you warm, right? So I'd urged, you know, if you're lifting your finger, one of you also is housing that finger like this. So your neighbor is housing your finger, right? Right. I can see some of you are getting it like that. So, yes, I can see with Aura there. So you can lift your index finger, one of you is housing. So the thing is, I want you to grab that finger on my count. So 3 counts, right? So I just want to see, you know, they've talked about flexibility, adaptability. You need to be nimble for you now to actually be in this digital space. If we are still rigid, then we will break. So how nimble, how agile, how active have you been? This is what I want to realize right now. So on my count, are you ready? On my count, are you ready? Okay, 1. We're doing a dummy run, huh? 1. How's that finger? You are lifting, then how's it? Yes, yes, like that. Fantastic. Good. All right. So make sure you grab that finger. Okay, 1, 2. Grab it. How nimble? That was a dummy run. Tell your neighbor that was a dummy run. That was a dummy run. Let's try again. Now that you got the gist of it, right? Let's see how active, how really nimble you are. Okay, my count. 1, 2. Follow instructions, please. Follow instructions. And that's why we had that particular session on Regulators Hard Talk. Instructions, rules. Very, very, very imperative. Okay, let's go. 1, 2. Grab it! Clap for yourselves, please. Thank you very much. Okay, Academics Hard Talk. This is a session, the final session we're having with the panelists before we have the breakout sessions. And I want to call upon Kanwaljit Singh, who's a Senior Program Officer, Bills and Melinda Gates Foundation, to come over to the podium right now. And also he'll come and introduce his panelists who will join him for this engaging discussion. Also, as we're preparing for the digital space, it's very critical on how we're preparing also our curriculum. And I think this is where this conversation is headed as well. So we want to open that particular space. Please put your hands together for Mr. Singh.
Well, I must thank our MC for getting that exercise activity going, because it is lunchtime and the session is entitled Academics Hard Talk. So the importance of that activity cannot be understated. So hello, my name is Kanwaljit Singh. I'm a Senior Program Officer with the Bill and Melinda Gates Foundation. To set the tone of the next session, I wanted to go over the definitions of what academics and what hard talk means to me. To me, academia embodies a spirit of fearless and deep inquiry and reflection. And hard talk is unrestrained expression of truth, however unpleasant. So having said that, I am honored to have this opportunity to moderate this panel, which brilliantly brings together a depth of learning from academia and matches it with field experience, a breadth of field experience. So to do best justice, to the introductions of our esteemed panelists. I will let them introduce themselves. I have made a request to the panelists that in their introduction, they should start with a story of what personally fintech or technology means to them. And I can go with mine. So you already know my name, but what technology means to me is I was born in India, I went to school in the Middle East, and I got educated in the US. So throughout my travels, being connected to my family has always been a thread which has been very important to me. Even when I was a student with no job, I called my mother every day, still do. Now I have a job, I call my kids every day, still do. So to me, technology has been about connecting people, and that's my connection with technology. So at this point, I would like to invite the panelists. Professor Victor Murende, and Professor Njungana Ndungu, Ms. Arunima Ote, Professor David Lee, and Tamara Cook. All right. So in the interest of time, they have told us to keep the introductions short. So they will be very aggressively timing it. Please, Victor. Your mic is not on. Thank you.
Sorry. My name is Victor Murende, and I'm AXA Professor of Global Finance at SOAS University of London. My main story here is that when I was appointed to a personal chair as Professor of Finance in 1999, my main two areas of work were, one, transaction costs, and two, risk-taking behavior. And as an African in diaspora, I used to remit some money back home in Africa to help my mother and my siblings. And then I discovered that actually my marginal propensity to remit was, say, about 20%, but actually 3% was taken up in transaction costs. In other words, not all the money I was sending home was actually received because of high bank charges and high fees in the transmission. When I tried to change the mode of remitting my funds and use trusted friends, I then discovered to my horror that my risk exposure was 100%. In other words, the money never got home. So these two, and later on, in 2011, when I moved to work at the African Development Bank as the first director of the African Development Institute, I made my team to focus on these aspects of new financial technologies that were paving the way for being able to help the unbanked and to be able to bridge this gap. And in 2014, when I went back to the University of Birmingham, I then started on 3 new projects that I have moved with to SOAS University of London, which are on innovative financing. That is financial innovations at household level and across the main streams of society, one focusing exclusively on Africa, another focusing on China, another one on detecting mega trends. So that's the story.
Cool. Thank you, Victor.
Thank you. Thank you very much. And I think from Victor's story, I don't know where to start. I think, let me say that my life is about capacity building. And I've managed to deal with that subject matter, or let's say, should I say responsibility, across all the institutions that I've worked in. I started my work at the University of Nairobi. I've managed to build capacity in a think tank, Kipra. I've managed to build capacity everywhere I have gone. And in Central Bank, I managed to build capacity. I really emphasize capacity because I think that I listened to the last panel, and they talked about learning, trying to bring a mix of, should I say, talents. But the bottom line is that at the end of the day, it's the capacity of those individuals that you build the capacity to read what is happening in the field, and the capacity that is what the knowledge that is you are generating from the market that is going to shape the market in the future. And that is what we have lived in. So I moved from central banking to African Economic Research Consortium. I am the executive director, and we are managing capacity in Africa, in sub-Saharan Africa, through research and graduate training in economics. So it's not a mistake, or it's not an error, that it is all in terms of capacity. And here I am, everything that I've done in my life tends to follow me. And this is FinTech, financial inclusion is following me from where I have come from central banking to now this AERC, and now even to this forum. I think for me, the key word is capacity building in African economies.
Thank you, Jigra. Aruna?
Thank you. First, I'm really delighted to be here. I've been an academic scholar at the University of Oxford since January. While the question you asked us helps me share that in 1979, when I met my guardian's counselor, preparing to go to university the following year, I told her confidentially that I didn't want to be a medical doctor, which is what my mother wanted me to be, and I didn't want to be an engineer, which is what my father wanted me to do, and I wanted to be an inventor that would bring impact. And yesterday, Leslie Go from the World Bank and from Cambridge talked about the blockchain bond, and I want to publicly share a secret with her that when together as World Bank Treasurer, we finally introduced and launched the first publicly known blockchain bond in the world, I thought that I had become an inventor. And so it was time to then move on to my next role. So thank you.
Thank you. Tamara?
So I'm Tamara Cook with FSD Kenya. And as I was thinking about this question, I was thinking about how technology, what it means to me is an enabler. Technology is never the end. It's always the thing that helps you do something better. And as I was thinking about FinTech, I was thinking about the website tools that I use to help me better visualize my own personal family financial management. And that reminded me of one of the first FinTechs that I saw in Bangladesh, but it wasn't really a FinTech. What it was a savings collector who was using a Palm Pilot, not an iPhone, not a smartphone, but a Palm Pilot to collect savings. And what I loved about it is it used the functionality of technology to visualize a savings bank, a mud savings bank, and it used the sound of coins falling into a bank to encourage the customers to understand, because they couldn't read, that they had saved their money when they heard that sound. And so I think technology is an enabler to help us do what we want to do anyway.
Thank you, Tamara. David?
Maybe you can, David, do you want to?
Okay, I'll use that. Okay, my name is David Lee. I'm from Singapore University of Social Sciences, and since 1993, I spent about 20 years in the financial industry, and up till 2012, just after the global financial crisis, I found that I couldn't understand the market. So I was just thinking to myself, either I go to the monastery to become a monk, or I go to the university and do research. So I chose the latter, and in 2015, I invited Professor Gujuna to come to Singapore to talk about inclusion, and he came to Singapore and gave a very good speech. That was maybe about 3 or 4 years ago, about inclusive FinTech and m-pesa. So to me, technology is about inclusion, and I'm glad I'm here today because this is my first pilgrimage to the Inclusive FinTech Center of the world. I think we should applaud that. And I thank MES and also the Central Bank of Kenya for making this happen.
Thank you, David. So with those introductions, I hope the audience now has a window into our panelists, what's important to them and what's their personal connection with technology. So I would like to begin with the panel discussion with a question on the concept of the diffusion of FinTech. We hear the great potential that FinTech has. We have seen the m-pesa story play out in Kenya. But what are the limiters? Like, do we understand what are the country characteristics that allow FinTech to diffuse into these ecosystems? And how exactly does FinTech help with financial inclusion and sustainable development? Victor, would you like to?
Yeah, thank you, Kanwar. The diffusion of FinTech, indeed of any financial innovation, is critical. And by diffusion here, we are looking at how the processes of innovation and how the products that have been innovated, how they flow from one household to another, myself to my neighbor, how they are able to be adopted across companies in the same industry or across the industries, how they are adopted within, say, countries, how, say, FinTech, new technologies, new apps are being adverted from one country to a neighboring country. You have, say, geographical proximity, or within the region, and also at the global level. Okay. And here we're interested in two dimensions of diffusion. The first is the speed of diffusion, how rapidly a new technology gets transferred between, say, Kenya and Tanzania. That's the speed. The second is the extent of diffusion, the accumulated diffusion, that how countries are able to accumulate the diffusion and then apply it. Okay. Now, in our research, we really have two serious gaps so far in terms of knowledge, what we know. The first one is trying to pin down much more precisely the factors that explain why different countries have been able to adopt technology, diffuse technology quite quickly, quicker than the other. What are the critical factors? You can have a lot of, so many factors, but you need to pin down the critical one. Because making a policy, for example, or making intervention, or planning your company is about priorities. Which are the main priorities? And in here, we have had three main candidates, and we can even go into subgroups. The first one is governance, which includes, of course, the political stability, the absence of corruption, and also, interestingly, the legal rules, the rules that govern, say, for example, businesses. So the first is the governance. Okay, these are the governance contexts. The second type of factors we look into are precisely infrastructure. And not any type of infrastructure, by the way. We are looking at, for example, internet penetration. Okay. The rate at which the internet is adopted across the main areas of the country. We're also looking here at, for example, electricity availability, and of course, electricity reliability. It may be available, but not reliable. So infrastructure is the second component of the factors, sub-factors we look into. The third important factor that needs to be investigated very clearly, or investigating in this case, is certainly the business ecosystem. And here with the business ecosystem, we are looking into aspects, for example, that how quickly it takes to start a business, the red tape, oiling the wheels. To start a business, you may have to see somebody privately or have dinner with his friend. Okay, all those kind of, so the ecosystem is not only about the ease of starting business, but also it is about the supporting mechanism for businesses, the payment system, and others that form the ecosystem for running a business. So this is the first gap. Let me quickly just mention the second gap. The second gap arises from what the international communities are doing. The United Nations 2030 Agenda for Sustainable Development is very clear. The G20 high-level principles for digital financial inclusion is very clear. These two have a congruence in the aspiration in terms of making sure that FinTech paves the way for financial inclusion and then paves the way for sustainable economic development. The question that has to be answered is how.
Thank you, Victor. And you're gonna, to take an example from how a plane takes off, I mean, you had the pilot's eye view of the m-pesa story in the birthplace of FinTech. would you like to share some perspectives of what you saw? What were the takeoff vectors? What were the risks that were dealing with live?
Thank you very much. And I think that is maybe a very interesting perspective from what actually Victor has described. Because I think when we start talking about fintech, we always come up with a very nice catchy word, disruptive. And one of the questions we should ask ourselves, what are we disrupting? Maybe the system, or maybe the financial services in this example, went into a sleep mode. And that was a comfort zone. They did very little. I think when I went to the central bank, I joined the central bank in 2007, there was just like 3 million accounts for a 30 million adult population. So it means that there was something that was not working. But I think from the question you have asked, I think one of the things when I saw this, that I would be in an academic hard talk, I asked myself whether I'm carrying the graphs for academic hard talk and see who is going to be bruised. But the beauty about it is that it's to connect the dots. Maybe we haven't connected the dots so far. Let me give an example. I've listened the whole of this morning, and what I have heard coming up so frequently is actually the flow of information. We have just a nice way of flow of information, and we can use that information. The flow of information solves, to a large extent, information asymmetry problems. And that is very good. But now, let's come to M-pesa, and maybe I'll connect the dots in terms of how the flow of information is working. I've looked at so much literature, and I've written also a lot of issues, a lot of things about M-pesa. But everywhere you find a different type of literature that describes M-pesa as a fintech product. And then there is another strand of literature that believes that M-pesa is a fintech itself. And then all of a sudden, there is another strand of literature that argues that actually it's one of the most successful regulatory sandboxes in the world. All those are interesting, but what do we see from there? First, I'll try now maybe 3 or 4 factors that have made M-pesa what it is. The first thing is that we wanted to talk about financial inclusion, but we didn't know where to start. Having a bank account, and somebody here talked about having a bank account is not a problem in some countries, but what do you use it for? So essentially, the first thing M-pesa produced in the East African region as a good example is that it's created a retail electronic payments platform. And that is an entry point to any financial services platform. And it has been used by various organizations, including the government. The government is using retail electronic payments platforms for its services. Go to driving license, passports. Even the Kenya Revenue Authority is using that as a payments platform for its tax payments. It's deciding taxes using that tax payment platform in mind. So the first success story is having a retail electronic payments platform. And that's very important, that you don't have to go to walk to a point of service. The second one, and which is for us is very, very critical, is that we wanted the M-pesa, or maybe financial inclusion, to introduce some savings, or even virtual savings. And we have seen that that's a success story. I've been looking at the data on virtual accounts and even virtual credit platforms in Kenya, Tanzania, Uganda, and Rwanda. And it's an amazing story. In Kenya, one of the savings products has 24 million accounts. One bank is holding 24 million accounts. So you can see that it's making a lot of difference. But what do we get out of that? If you connect the dots further, how did we make monetary policy when there were very few people participating in the financial system? When the cash outside the bank was so huge, how did we make monetary policy? It was not possible. But perhaps now we can reformulate and come up with forward-looking monetary policy framework for those countries that have not. Kenya has done that for the last, perhaps 10 years, from the last 10 years. And for us, that is very, very important. Everybody talked, even in the last forum, even in the last discussion panel, everybody talked about risk. When you have electronic payments, it means you can monitor risks. We have seen countries improve AML, CFT regime in their own respective countries because they are able now to monitor payments and even who gets the payments, where do these payments move. And finally, one of the latest contributions that I'm making is actually to say that we can get all this, but how do you get it? it was answered in the earlier cases in terms of we have to adopt a transformative regulatory technology. Do we have it? We need to train people. We need to train them first by seeing what is happening, and two, by seeing how they can actually come up with derivatives coming from this market. The second one is institutional capacity. Do we have adequate institutional capacity to take care of that? I know you mentioned about, Victor mentioned about legal framework, but I believe that institutions themselves can provide the governance structures that is required because they provide two important functions. One of them is to define the legal framework. And once you have defined the appropriate legal framework, then things become easier for a regulator. But the second one is that you actually define the appropriate incentives so that those who don't follow the legal framework know that there is a reward structure or a penalty system that is going to deal with the issues of not following the laid-down rules. And this is what we see across, and this is what we want to encourage. So I just wanted to give that example, because we really need to connect the dots from M-pesa to financial inclusion and to institutional growth. That's the financial sector growth. Then what next do we need? We need now to move into safeguarding that. But my experience has been that there's a lot to run, but the most important thing is that capacity to run, to implement new ideas, when they come and the market is actually receptive to the ideas, becomes very, very critical. I'll maybe come back to some few issues later.
Right. Thank you, Jingra. Arunima, Victor mentioned about the speed of fintech adoption. And your experience as a regulator, can you speak to more about that in how does it work in a country context?
So Leslie Gowan and Jugana and I were at a panel 2 weeks ago in Cambridge where I was asked how come Kenya adopted m-pesa faster than Nigeria, my home country. And I was a regulator at the time that Njuguna was the governor of the central bank here. How come Kenya did it faster than Nigeria? And I didn't say that the Kenyan marathon runners run faster. It really gave me a chance as a former regulator to explain what I consider is the ecosystem around both the speed of adoption and the quality of the adoption. So for me, regulation is absolutely essential. When you looked at the stage where Nigeria was in the last 10 years, the central bank and other regulators felt that it was important that the focus on strengthening the financial sector, that we had completed that process. And what it meant was a focus on improving capital requirements, on anti-money laundering that the deputy governor mentioned, of the Kenyan Central Bank mentioned earlier, on consumer protection, on improving the quality of services from the banks was a very primary focus. So the regulators, in my view, did not, in a sense, they were more focused on ensuring that the existing entrants were strong enough, and they were concerned about new entrants who were not as familiar with what the traditional requirements of a strong financial system was. So that's one. The second, which I'd like to share more broadly, and I'll use an example that I also shared at that previous panel, is that there has to be clarity on the impact of that product, the fintech, on society. And Chris, at the beginning of the session today, talked about the human need. And the example I like to share, because I love m-pesa, so every time I get a chance to spend time with a Kenyan, I ask them what was their experience. And I served on a board with a woman who said to me, I can be honest with you. My grandmother in our village adopted m-pesa before I did, because I had a bank account, I had internet banking. So there was a clear need and there was clarity on that solution that would absolutely impact society. The third that I'd like to share is the structure of the industries concerned. And in the interest of time, I'd focus on the mobile network operators. In Nigeria, Nigeria has 200 million people, as many of you know. When mobile telephones were introduced in Nigeria, we had 450,000 people connected to telephones. So, and the mobile network operators will not appreciate what I'm going to say. They were just printing money from the 450,000 to today where we have 120 million and still counting. So they were focused on building the base, the foundation for a strong mobile telephone sector. And I think that that was probably very important. The third point that I'd like to make is around, it's been a constant thread through this festival, is the issue of skills. I do think that you need skills everywhere. The head of the capital markets regulator, Paul, talked about the importance of skills in regulatory organizations. The speaker from Ping An yesterday talked about how many engineers focused on artificial intelligence that you have that has fueled what we've seen in China. So talent and investing in talent, for me, is absolutely essential. But I also think that the potential consumers need to be digitally literate and also need to be financially literate. And so I am absolutely advocating that as Africa, that we need to take the steps that will make sure that most Africans are digitally literate and that they're financially literate. So yesterday, when the president of Kenya, Uhuru Kenyatta, talked about the blueprint, talked about what they were thinking about the equivalent of Adaha, I thought, yes, this is leadership from the top. And it takes me to my next point, which is that you will move faster if there is leadership from the top. And we've seen across Africa where there are leaders, where there are presidents leading this, what I consider a potential revolution that will transform the continent in a very positive way, that will bring inclusive growth. We've seen that those countries are moving faster than other countries. Finally, I want to make a point around, yes, we need leadership from the top, but we need sponsors at every level. And I will give another example with Nigeria. But I do want to acknowledge the governor of the Central Bank of Kenya, Patrick Njoroge. I mean, he has been leading this revolution or the inheritance that you handed over to him. Because it is important that you have sponsorship in industry, amongst regulators, and everywhere. So I'll take an example of Nigeria again. We had a Minister of Agriculture who decided that e-wallet, in terms of helping bring farm inputs, fertilizer, seeds to smallholder farmers across Nigeria, was absolutely essential. He was a sponsor. He got the central bank, he got the commercial banks, he got the president, he got all of us who were in government to be advocates. 3 years later, we had 15 million farmers, including 2.5 million women, who got their farm inputs. Prior to that, only 11% of those inputs actually went to the smallholder farmers. By the time he instituted that program, it came to 94%. And that program was emulated in Kenya, across Africa, and outside of Africa in places like Afghanistan. So it's regulation, it's making sure that we're clear about what we're trying to solve, it's the industry structure, it is leadership at the top, it is sponsorship at every level, but it is literacy, literacy, literacy. Thank you.
Thank you, Rama. So Tamara, based on the discussion that you heard so far, you bring a field experience which is deeply entrenched with people's experiences. What perspective would you like to add?
Sure. Well, and as I told the panelists earlier, I am not an academic, but I'm an avid reader and digester of research and data. And we work with many researchers to inform our work in the field, including Radha from University of Nairobi, who's in the audience. And what we've seen is that we have a lot of good news and a lot to celebrate, which you've already heard talked about in Kenya, but we also have things that aren't working, and research helps us figure out what those things are. So for example, several years ago, we were celebrating the success of m-pesa and the adoption of the population, which is great. But when we did the Kenya Financial Diaries, what we saw was that even though lots of people were using m-pesa, 95% of the transactions in that research were still happening in cash. And so we asked ourselves, why is that? What is it not yet doing for people for them to move more of their transactions to a digital form? And just recently, you've heard several people note that we've reached 83% formal financial inclusion here in Kenya, but we've had some bad news that came along in that same survey, which is that the Financial Health Index, which is looking at whether people can manage day-to-day, deal with shocks, and invest in the future, has dropped dramatically from 39% of the population to only 22% of the population. So we're making huge strides on what we like to think of as financial inclusion. So people are being included into the financial sector. But the question we're asking ourselves is the financial sector truly inclusive? And so we've kind of reversed these words and we talk about inclusive finance. Instead of just counting, have people been included, which is part of the story. The Deputy Governor this morning said that financial inclusion is important, but it's not the end of the story. And so as we think about having an inclusive finance system, which includes FinTech, we need to think about how can the financial solutions do more for Kenyan families, for Kenyan businesses, and for the broader economy. And I see our time is drowning, so I'm going to end there.
No, thank you, Tamara. David, I wanted to hearken back to something I heard in the previous session and a bunch of different other sessions. Cybercrime, cybersecurity, and cyber resilience. These are words which were used in multiple sessions here. We have personally conducted interviews of many regulators, and when we ask the question, what keeps you up at night, the chances are 9 times out of 10 the regulator says cybersecurity. And what we wanted to find out from you was the nature of risk in the global financial system is evolving very rapidly. We have distributed ledgers coming, we have cryptocurrencies, we have Facebook Libra. So that how does this risk get managed in today's ecosystem? And especially from a regulator's perspective, there is regulatory fragmentation. So there's mobile technologies involved where a telco regulator needs to take view. There's banking technologies involved where a bank regulator needs to be involved. So how do you view the management of that risk as it rapidly evolves?
Yeah, I think that's a very important question, a very important issue. You got to think of the virtual world that we're all dealing with. It's like an open sea, and there are a lot of malicious elements working, and they're anonymous. So they come from everywhere, anywhere, and frankly speaking, the best regulators may not know where they come from. So that is the kind of situation that we are dealing with. And from financial inclusion perspective, whether financial inclusion becomes losing privacy of your data and everything else, whether financial inclusion becomes that you have no control over your own wealth because this growth hacking will entice you to spend all your money and have leveraged yourself, or would this virtual world that we talk about financial inclusion will destabilize the fiscal and monetary policy that has been stabilizing the entire economy. So these are all very important questions, but the crux of it is that we are so used to a centralized world. And that is true because in the physical world, it's centralized. There is an element of existence. But once you go into the open sea of the virtual world, you are not centralized anymore. Anyone can exist without your knowledge. So as a regulator, you have to really think about a different scenario altogether. You walk into any tech companies in China, they have an ops room, an operational room like a war room, that you have 20, 30, 100 people monitoring every transaction and see where the fraud are coming, and they immediately stop. So regulators, sometimes we are more concerned about post-event accountability, but the pre-event and during that period of regulatory tech and supervisory tech become very important. So we cannot lag behind in terms of regulation. We cannot front run in order that the innovation is being killed. We have to be in tune with the regulation. This is what MES is thinking about. But more importantly, I think you have to be participating. As regulator, you have to be part of the startup ecosystem, having the company sitting next to you and getting involved and maybe investing in them and learning about all the mistakes. Because it's about not being afraid to make mistakes, but learning in the process. It's a time where you learn from mistake regulation. So in that aspect, education is important. Financial literacy, we know the limitation from 2008. Regulation is important, again, in terms of classification of complexity of products and risky products, there's a limitation. So the question is whether we should use some of the latest technology like blockchain to protect privacy. There are many, many techniques out there for privacy protection. They can do analysis on the raw data without even looking or have access to your raw data. It's called multi-party computing. It is called zero knowledge proof. It's called secret sharing. So the techniques are out there. So I think as regulators and academics, we need to be up to, our own literacy has to be up to date so that we know what technology can do. And somebody proposed to us that I'm going to have a white paper, okay, a new coin, but privacy protection is only mentioned once. And then there's a lot of question mark, question mark, question mark. So I think it's qualitative as well, but once you know technology and they're available and you're not using it, and you are saying that you're going to do financial inclusion, then I have to think very hard about it.
All right, thank you, David. So thank you for that rich and insightful discussion. So before we started the session, I had put out a comment on the WOHA app to invite audience Q&A. And it appears that the audience either is very hungry or very sleepy, and we haven't gotten any questions on the WOHA app. But this morning I was inspired to be more human, so I want to open it up live. If anybody has a burning question for the panel, I would welcome it and call on you now if any of the audience members want to ask the panel something. I see a hand raised up. So, yep, please walk over. Is there a mic that we can give them? Or you can just step up. There you go.
Good afternoon. I'm Radha Upadhyay. I'm a research fellow at the University of Nairobi. I like the comment about financial literacy because I think it is important to overcome issues like over-indebtedness that we're already seeing creeping in digital lending. And yet the research on financial literacy has shown that most programs don't have any tangible outcome. So when we're talking about financial literacy, I'd like to hear from all the speakers, like what do you think will really work?
Thank you for the question. We don't have time for all the speakers, so I would encourage anyone who feels very passionate about it to take the question. Arunma, perhaps?
Let's take 7 questions.
There's not enough time, so I think this would be...
Okay. No, your point around making sure that financial literacy is very focused on the right outcomes is extremely important. And Tamara had made the point about the financial health. So when I was the head of SEC Nigeria, we had a multifaceted program. But the anchor of that program was to make sure that you didn't make a decision on a product as a user that you were not familiar with. And so building up your own capacity to take responsibility for your own decisions. So you're your own first risk manager. So we had a multitude of programs. We leveraged Nollywood. We had things that, when you were as a child, we had programs with universities. But the anchor was a message that you have to take responsibility for your own financial health. So moving it from just financial literacy to financial capability and to health is what I would advise.
Yeah. And Juna has a comment.
Thank you very much for that question. And I think because my dear sister here has answered it very effectively, I can maybe push it back. I thought I would get another chance, but I think the best thing is actually to talk about regulatory capacity, the capability and capacity, because one of the things about regulation is actually to create that environment that is appropriate. What Tamara is talking about, just look at in Kenya today, look at the betting. 5 years ago, we actually produced a regulatory scheme so that we prevent, because you do not want to say that it is literacy that is drawing people into that. No, it is actually the regulatory capability and regulatory capacity. We need regulatory capacity, institutional and regulatory capacity, to actually protect the market and also have regulators who are agents of market development. So that when we see that there is a deviation from what we call the norm, it doesn't matter how lucrative it is, but you know that it is spoiling. And then one other issue that was also mentioned is that financial literacy will work if it is functional to you. But just look at it. Benno gave one example that fiscal instability, then the moment you start encroaching taxation in those financial transactions, retail electronic transactions, then people will push away. It is not that they are not retreat. They are, but they are actually counting on the costs. So essentially, we have now to move back and say, what institutional and regulatory capacity do we require to protect the market and grow the market?
Right. Thank you, Jigra. At this point, I would like to thank the panelists for this really insightful discussion and give the mic back to our very nervous and very agitated MC.
Oh, yes, indeed. Thank you very much. I really appreciate. I must say I'm really under the gun to make sure also that you're not hungry, right? I know this conversation is very, very absorbing and very interesting. But at this time, we want to actually also have a session through the breakout sessions. And I think that is where we can actually get to have, you know, most of the people also peppering you with questions as well. But I really do appreciate this session. It has been very insightful. Thank you, our able moderator. A round of applause for them as well. Thank you. Thank you, Kanwaljit. We really appreciate, and our panelists, thank you so much. Right, so at this particular time, because we're really doing badly on time, so I'm really under the gun, I want just to make quick announcements as far as breakout sessions are concerned. First of all, of course, you know, under the themes that they are running under, we have the spirit of innovation, technology for tomorrow, and social impact. So we have our ushers outside who are holding placards that they will guide you to various stations that you should be going. And I wanted just to also pick out that the Artificial Intelligence Workshop, Insights from Asia, which is meant to be running from 1 to 2 p.m. and we're lagging behind time. So still within that particular 1 hour, we'll see what to do. Please kindly make sure you keep time. This is a meeting that is taking place at DTB room, and this is for central banks only, right? The AI workshop, Insight from Asia, is exclusively for central banks only. We also have the API exchange, that is APIX, an innovation, a lab on the cloud for financial institutions and fintechs, right? This is for fintechs and banks only. They are meeting at Vuma. Also, Stanchat, they've already started. That is the future of banking. And the meeting the subsession is digitalization of trade finance workshops. So that is ongoing. Kindly make sure that, yes, you walk over to that place. Also, I need to make this quick announcement as well. The launch of Afro-Asia FinTech hackathon will be happening here at the plenary session. And of course, people who are in the fintech field are encouraged to participate as well. Wallace, I can see you nervous as I am.
I'm never nervous. Now, since everyone in the plenary can hear either myself or Dibao, there's something that everyone has been looking forward to quite intently, which is the hackathon, which Debal has just mentioned. You do need to hear the details of the hackathon, what exactly it is, and how you get involved, because it's really, really important, especially if you're doing your fintech innovation. This is something that will be of great, great use to you. So what we're doing is we will ring a bell. That bell might just be my voice shouting. In about the next 12 or so minutes, so just before 1:45 to 2 o'clock, I will either shout or ring something or break a bottle, which will be the hint for you to come back into this plenary if you're interested in the hackathon, because we want to take you through what that hackathon involves, how you get involved in that hackathon, and what it could actually mean to you as a fintech innovator. So because we don't want to have lost everyone, and we do know there are people trying to wind up different things that they're trying to do, so we want to give you that 11 minutes. If you take that 11 minutes, at some point you'll hear my voice very loudly telling you to come back into the room so that we can start the session on the hackathon. But everything else that Dibal has outlined in terms of the sessions that are coming up after this, if you're in those sessions, please make your way into the different areas and the different places, and we shall begin those sessions. But for the hackathon, in now about 10.5 minutes, I will be calling you.
Thank you, Wallace. Also, I realize that most of the rooms that we're having these breakout sessions, they are adjacent to each other, save for where we have DTB and SBM room, which is actually behind the food court. So don't get stranded. Just walk over if you're attending those sessions, DTB room and SB room as well. So see you then.